Oh, oh.
Hello.
Hell,
Hello.
hello, yep.
Hello.
Yes, how are you?
And see. Okay, okay.
What is this? What is this? DR IDR thing? क्या है मादर चोदो बताओ तो सही.
Starting soon.
I think this guy gonna do something. See?
Hmm. All right, guys, are you ready? I'm ready. Can you hear me? That's the first question because I tried to also restream it on YouTube in case the stream is going to be full. Let's have a look. Check the YouTube live stream quickly. Be great if everyone's able to mute themselves here in this chat because I'm not gonna listen to them. I'm only gonna be reacting to messages in the chat here on Discord or straight on YouTube. All right, the question now is if the people on YouTube are able to hear me. Just write it into the chat and then I basically know. All right, so we've got Discord open here. And we've got OBS open here. All right. OBS open. All right, I'd say we get started. I think no. Hey guys, can you hear me on Discord? I think so. Now I should be able to be talking. We also have a YouTube live stream going on in case this Discord server is going to be, or this Discord channel is going to be full again. Let's say we get started prior to 8:30 because at 8:30 we're expecting some red folder news. I'm not expecting too much volatility today here at 8:30. This is going to be 08:30 a.m. New York time. News. Ba-bam, ba-bam. Just so we mark everything up here on the chart. 8:30 right now, it's 2:12 here in Germany where I'm living, so we've still got roughly around 18 minutes left until we get those news released. Those are two trades I entered earlier this morning based on a 4-hour fair value gap from, I think, Monday it was. But I'd say I'm starting off with recapping the trades I took yesterday because they're really interesting. Here's all my charting work. And let's say we get straight into it. I'm just grabbing a glass of water and then I'm back. All right, let me actually open up the YouTube chat as well. So I've got this open here. Can I reply in here? No, it doesn't look like it. So I have to open up the YouTube chat myself. Right here. Maybe react with a thumbs up in the YouTube live chat in case you're watching it over YouTube. All right, but I would say we get started right away with the price action we had yesterday because I was not streaming live yesterday. I was actually over at a friend's house and I traded based on my iPad and it worked out really, really well. I'm really excited about that. I watched the news and yeah, I'd say I'm going to do a little analysis before we hit 8:30 a.m. New York local time. All right, so here we are. This is a 5-minute chart, 5-minute time frame of the price action we had yesterday. If we turn off the DR IDR range quickly, hang on, Session Pro, let's turn this one on and also turn on the kill zones. So we have a few reference points. If it's going to load. No, it doesn't matter. All right, so basically what we had here, this is midnight, this gray line here, those two separators. This is basically the whole trading day according to New York local time for Wednesday. And here, this is the early or the late Asian session. That's 1 a.m. New York local time, and at 2 a.m. New York local time, the Frankfurt stock market is opening up here in Germany. And we saw a continuation move also during the London kill zone down to this little fair value gap we formed on a 5-minute chart, which formed on Tuesday after we had our CPI news release. We also streamed live during the CPI news. I'm talking on Discord, perfect. So we filled in this little fair value gap, and that's actually where I got my entry filled, right here on this fair value gap. And I took it long, unfortunately not up here to previous day high. I only took it long up to this high, and I actually banked a nice risk to reward trade prior to the FOMC news yesterday. Let me get rid of this volume profile here. And then we saw price moving up higher and higher and higher into the CPI's news. So now we are hitting 930 and we got a massive bullish candle that continued up higher. On Nasdaq, we actually got a beautiful continuation entry into this fair value gap we created at 930 actually. Continued walking our way up higher above this Asian session high right here. This is colored in blue. Let me drag this out a little bit. This is our previous week's high level, and this is right where we started to consolidate. So we pulled back into it right here, and if we turn on the DR IDR, we see this is the top range of our IDR and DR right here where we pulled back. We held some support on this Asian session high. I was looking to take some long positions prior to FOMC all the way back up to here basically. But that's when I exactly left the screen, so I closed my position somewhere around here with a, I think, 1 or 2 risk to reward trade. But this was not an ideal trade entry basically. I think I entered it based off a 1-minute time frame. So afterwards, we pulled back into our previous week high, Asian high, kill zone range basically. So we pulled back right where we formed this little support here on the left side, and then we got really close to 2 p.m. New York local time, where we got our 50 basis point interest rate hike announcement from the FOMC, from Jerome Powell. And basically the trade I took was actually insane. So on a 5-minute time frame, what we see here is prior to this 2 a.m. New York local time, now 2 p.m. New York local time news candle right here, we saw a inverted pin hammer being formed here. And if we check the 1-minute time frame, let it load quickly. All right, now just the candles have to load. I'm working on a better internet connection as well, so just gotta be a little bit more patient today. All right, here we are. So right here, prior to those FOMC news, I saw the perfect entry conditions for some of, basically according to my playbook. We went above this high of the day prior to the 2 a.m. news candle, basically. And we consolidated above this high. We pulled back inside of some sort of a fair value gap. We broke down further below it. Then we pulled back. And exactly as soon as I saw this 1-minute candle, I told my friend, let's go short into this market, because this little wick right up here, I considered this wick as a little stop hunt for everyone who's already positioned short up here, and they place their stop losses very likely above this area. So what did they do? They move price back up in above this area, and then sellers started to get into this market, and they formed this little pin hammer. This is the exact 1-minute candle that I entered short on, and I got filled because it was not a 2 p.m. New York local time candle. So this was really a little hint for me of what price is going to do prior to the FOMC candle news. My profit target was set to our previous day's low. So I had 2 contracts going on, 2 micro contracts. In this trade, I had a stop loss of 30 ticks or 7.5 points. And my first take profit target was the Asian or the you could say early New York, late London, kill zone low right here, which is also this fair value gap where we took this initial long trade to the upside. So this was my first take profit target where I took one contract off this trade. And my second take profit target was all the way down here on our previous day's low. Let me zoom out here quickly and then I can show you the previous day's low. It started somewhere here. My candles just have to load up. I don't know why my internet connection starts to be a little bit of annoying, but I'm working on it, and I think next week I should have a way better internet connection. Doesn't matter. This is our previous day's low. I think we formed it during the early Asian session. And this was my second take profit target since I already saw this massive bearish candle to the downside here on a 1 minute time frame. With this little hint that formed right here at 1:58 New York local time, where we had this little stop hunt. Let me actually write it in here, stop hunt. And I also checked the 15-second time frame. So in my opinion, if you trade futures, you can actually look at a 15-minute time frame because the price action does not look bad at all. We now just have to wait for it to load. Maybe we can speed things up a little bit if we use, no, here we are. Asia high, previous week's high. We just have to wait until the candles load all the way over here. Come on. I already marked this up, the stop hunt for traders that were positioned right prior to the news. Come on. Just load. Be nice. Oh, that's terrible, man. I'm really sorry about that shitty internet connection. I should have it fixed by next week. We will find out if it's going to load here on a 15-second chart. Come on. Let's go back to a 5-minute chart. Maybe we can use a little trick here. I hope that internet connection is working today. Otherwise, I will have to stream as soon as my internet's going to be up and running better. Okay, here we are. So 5-minute time frame. So what we're going to do now is we are going to use the replay feature and we're going to replay it back up to this point right here. Now we're breaking it down to a 15-second chart and we should be able to see everything forming perfectly. Yeah, that's what I wanted to see. So basically what we saw on a 15-second time frame is exactly the same. So we had our initial high above our current high of the day that has been formed post 9:30, so post 9:30 a.m. New York stock market opening. So I marked this area out because that's where most of the stop losses are going to be in case some traders already anticipated a move to the downside during the FOMC news event. And then right here on this 15-second chart, if I zoom in here into this area, we see that we started to consolidate above this previous high of the day. Then we broke further down into, you could say, this little fair value gap here, or this tiny little order block on a 15-second time frame, from which order block we basically reversed all the way back up above our 9:30 a.m. New York local time high, above all this area right here, and we just wicked tiny little bits above it. So everyone who was already positioned short, maybe because of they saw a double top pattern right over here, or they entered short maybe thinking or anticipating this short trade during the FOMC news event. So those traders are very likely to have their stops very tightly placed right around here because it's a FOMC news event and they're all a bit scared. So what happened then is on a 1-minute chart, we got this inverted pin hammer right here at 1:58 p.m. But on a 15-second chart, we actually just formed a doji with a huge wick to the upside. So basically, the story this little candle tells us is that buyers got into this market, but the sellers had the upper hand and they pushed price right back down where we opened basically. So during the next 15-second candle, we basically engulfed all this price action that has been formed prior to this 15-second candle, and we left behind a little fair value gap. So on this fair value gap, you could have entered as well. Right here, this would have been the 1:59:45 minute candle. So that's 15 seconds prior to the FOMC news. I'm not sure about the slippage and if you're getting filled on this 15-second candle, but I think you should be able to. But I entered actually, we also see, I just realized it right now, we had a little volume imbalance right here. And see where you see the wick? The wick completely filled in all this volume imbalance right here, where we gapped up and gapped down right here. Price went into this volume imbalance, and 15 seconds later on this FOMC news candle, we dropped hectically. I don't know by how many points or ticks. Let me actually have a look. We opened here, we closed here. A 71 tick move within 15 seconds. So that's quite impressive. And here was the dead giveaway. I watched the 15-second and 1 minute time frame together with a friend at his place. That's why I was not able to live stream the FOMC news event. So yeah, this was my entry, and I think everyone who knows smart money concepts and everything that Mas7er has been teaching us so far, and volume imbalances and how important they actually are, even if you go down to a 15-second time frame, I think this price action right up here was a dead giveaway, for what's going to happen during the FOMC news happening at 2 p.m. New York local time. So if we go back to a 1 minute time frame, we see that, we want this line back to where it was, that we got this beautiful high of the day reverse opportunity with this beautiful inverted pin hammer. I think on a 5-minute chart it was that pin hammer, and a 1 minute chart I entered right here based on the stop hunt. And we also got a confirmation on this 15-second chart and this little tiny weeny volume imbalance right in here, which would have been a perfect entry opportunity to catch this whole move to the downside during the FOMC news event basically. So my first take profit, like mentioned, was placed right here, where I took one contract off. That was roughly a move of 40 points here on the S&P 500 E-mini future contracts. And my second take profit target was placed at the previous day low. Maybe we see it this time. Yep, that's our Tuesday's low. Right here we have the separation from Monday over to Tuesday, and this is the lowest point we formed on Tuesday. And I usually have those two levels marked up on my chart. Right here we should have the previous day high, that was the previous day low. And we basically, within this range, we stayed in, did we went into the premium zone? Let me actually have a look. So if we drag a Fibonacci tool from our previous day's high to our previous day's low from Tuesday, and we look at the price action that we got on Wednesday, we did not reach our premium zone to basically take a short in a premium and sell it back at a discount level or at a discounted price. We did not move above the 50% level here, but we also had a 4-hour fair value gap that was sitting right in here that we just touched and then we reversed during FOMC. But like I already have shown you on a 15-second chart, we've beautifully filled this volume imbalance. And on a 5-minute time frame, we had a inverted pin hammer, a dead giveaway for me. I love inverted pin hammers. I think especially at a high of the day with a simple 1-bar stop or a 20 tick to 30 tick stop, you're always on the safe side if you are at the high of the day and you already have a bearish bias, because basically what happened here is they tried to trap traders up high to basically reverse price on them. And because someone always have to lose money in order for someone to make money, that's basically what happened here at this high of the day. We saw a breakout above the current high of the day, which was formed right here after 8 or 9:30 right here. We broke above, pulled back, moved back up once again, trapped the last bullish traders here into the market, but sellers started to step in and they basically had more control. There were more sellers out there than buyers, And right here on this candle, that would have been a perfect entry on a 5-minute time frame, 1-minute time frame, or this little pullback on a 15-second time frame here on the S&P 500 futures chart. I hope all this made sense. You can write it into the chat if you do. I think, yeah, everyone's already in the stream. That's perfect. So I hope everyone understood this trade that I took yesterday. Let's go back to a 5-minute time frame. Right here. I think we moved it. My entry point was at the close of this candle, yeah, which was exactly right here with a 30 tick stop loss. And yeah, that was my opportunity. So in case this thing would have reversed, all I would have lost were 2 micro contracts. I'm only trading micros during a FOMC news event if I'm trading, and only if I'm seeing a nice and beautiful setup. So this pin hammer, I entered short with 2 micro contracts. So all I would have lost would have been maybe, I don't know, like 30 or 50 bucks, and I made some decent profits all the way down to the previous day low. Afterwards, before we hit this previous day low, actually, I mean, we hit it perfectly within the first 5 minutes of the FOMC news candle right here. So this candle opened up at 2 p.m. New York local time and closed at 5 minutes later, basically. And the following 5 minutes, we continue dropping perfectly. That's how precise the algo can be to this previous day low. A little bit lower than it actually, maybe by a tick, but that's how accurate the algo can actually be. And if we again go back to a 1-minute time frame, what's the time actually? 2:32. Yeah, I think the news today are not going to be so important, and we're still waiting for our range to open up from 9:30 until 10:30. So I'm just going to talk a little bit about yesterday's FOMC news price action. The next trade was actually spotted by my friend right here on a 1-minute time frame. Actually on a 15-second time frame, but we considered this little price action right here where we just went sideways, very indecisive, as an order block. Let's check the 50-minute time frame. Maybe it makes a little bit more sense over there. So orders reaccumulation in here we considered or labeled as a order block. And from here we started to make, we had a short-term low, we pulled back to make a short-term high, and we eventually hit our previous day low, this blue line right here, which was my second take profit target from my entry up high, from the high of the day all the way down to the low of the day, actually low of the previous day. So as soon as we hit this level, I was actually looking for a reversal, but my friend told me, basically my friend suggested me that we should be really looking at this order block right here, from which we continued moving further down, leaving behind a fair value gap up high as well. So if we would, for example, use a Fibonacci extension from this high down to this low, and we're going to use the ICT Fib retracement, we see that we got a beautiful optimum trade entry here. This red line represents the ICT optimum trade entry. Here are the settings for the ICT Fib retracement. So basically the 0.705 Fibonacci retracement is considered the optimum trade entry. All right, so we saw we hit the optimum trade entry right here, and we also had a fair value gap here. It also was a 50% retrace, a 50% level of this order block here, of this reaccumulation, basically, you could say, where we started to wick in quite a few times. But I did not enter right base here. My friend did, and I was looking to actually get a new entry, because most of the time, if a market is consolidating right above a previous day's low or right underneath a previous day's high, usually it's just charging up or building up some more positions to basically break down even further, making a new lower low on the daily chart. So this is our previous day low. We pulled back up into the optimum trade entry inside a fair value gap onto the 50% level of this order block here. We wicked inside of it quite a few times, but on this last time that we wicked inside of it, we left behind a fair value gap. And exactly on this fair value gap, this is where I placed my short position. I had my stop loss at 44 ticks, I really wanted to give it some breathing room because you never know, on a 15-second chart we could always see a little wick going up here and then I'm out of the market. So I was really confident in the trade. That's why I gave it a 44 tick stop loss. And we already made huge profits on this initial drop during the FOMC news trade. So previous day low was sitting right here. And we caught another 3-to-1 risk to reward ratio right here at the bottom of this 1 hour fair value gap. I'm going to show you this fair value gap within a second when we go back to our higher time frames. 1 hour chart, a 1 minute chart. Right here, this is the 1 hour fair value gap from Monday, I think. Yeah, that's the price action on Monday. Right in here, we had two 1 hour fair value gaps and also a bigger 4 hour fair value gap that's basically containing both 1 hour fair value gaps. So if we look at where we actually got rejected right here, we completely filled in this 4 hour fair value gap. And that's why I also took this short right up here, because we consolidated just little bits above our previous day's low. And we had a 4 hour and two 1 hour fair value gap sitting right below this previous day's low. And I really wanted to see those to be tagged for a potential reversal back into all this liquidity void right here that was created at 2 p.m. New York local time when we had this initial drop here because of the news. So right, those were my two trades during the FOMC news event yesterday. Afterwards, I just closed my screen. I think my friend took another short entry right around here, also based on a 15-second time frame. The 15-second time frame on very highly volatile news days is really going to be helping you. But even if you would have traded on a 5-minute, you would have seen a beautiful inverted pin bar or a pin hammer right up here at the high of the day for a nice reversal opportunity. Of course, it's a super high risk trade because it could have easily wicked up into this 4 hour or 15-minute fair value gap up, basically up here, but it did not do it. I had a little bit of luck on my side as well. And yeah, very simple setup if you ask me. And this reaccumulation, little bits above this previous day low, was also a dead giveaway for me that those fair value gaps are going to be targeted. After this, we basically just slowly but surely made our way all the way back up above the previous day's high. And then we had a beautiful bullish candle, leaving behind a fair value gap here as well, which could have been a very nice entry long, basically, to maybe target this area right up here. I know there are lots of lines on the chart. Maybe we turn off the DR indicator for a second to have a few less lines on the chart. Right here, this would be our fair value gap target. So we could have placed a long entry to basically, with our bias that we are going to fill in this 1 minute fair value gap that was created at 2 p.m. New York local time because of that FOMC news event. So we could have placed a long entry position right here with our stop loss maybe on that previous day's low. Our target would have been this liquidity right in here for a easy 2-to-1 risk to reward ratio trade. And right in here, I already charted it up yesterday on the iPad. I saw a little head and shoulders pattern forming. So we had peak 1, our left shoulder. We had our head basically that went into this fair value gap that has been rejected massively. Then we formed our right shoulder and we continued dropping back down into our 1 hour fair value gap, 4 hour fair value gap below our previous day's low, trapping traders short who want to catch this trade to the downside. Then we basically just consolidated, the market closed, and now this is the Asian kill zone basically, somewhere around here. Now that's 4 p.m. New York local time. We're in bar replay mode, that's why we don't see anything else. So yeah, I think yesterday was actually a very nice day to trade, even though it was a FOMC news event. So I'm very glad I actually had the opportunity to look on my iPad and talk to my friend about it. And yeah, we both caught those awesome trades right here. I did not participate here, or here anymore. I was not interested because I like to secure my profits when I made profit, even though it has to be a very, 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 very good setup for me to basically re-enter into the market once I already banked some great profit on a highly volatile news event. So now we're on a 1 minute chart. Let's actually exit our replay mode. So we had the news happening. What happened so far? We had a bullish move to the upside right here, and we just continued going further down. All right, so this is still our 4-hour fair value gap. If from all the analysis I just shown you from yesterday, FOMC day, after which we just consolidated still above our previous day's low right here, and now we formed a new previous day's low that we are going to mark up, which is going to be this level. We are going to label it as PDL, previous day's low, and we color it in blue as well, or turquoise. Okay, and we drag it out. We're already moving below it. We tried to retest it a couple of times. We had beautiful 1 minute and 5 minute fair value gaps being formed in here that we filled nicely. Let's go up to a 5 minute time frame, make a higher time frame analysis approach. So this was this 5 minute fair value gap right here, from this candle's low to this candle's high, and the same thing right over here. We did not, we touched this fair value gap, but we did not wick into this fair value gap. And I actually took a long position this morning during London, basically, or towards the end of the London kill zone, because I was really interested in those fair value gaps being filled, since we were holding support based on this 4-hour fair value gap. So those orange boxes are always 4-hour fair value gaps. The gray boxes are always 1-hour fair value gaps. Those blue lines are always previous day's low and highs. And then usually I don't have anything else on the chart other than some little yellow or gray lines or white lines to usually label liquidity, sell side liquidity, buy side liquidity, equal lows, equal highs. So basically what we had here is we had a reaction of our 4-hour fair value gap right here, that inside of this fair value gap, based on a 5 minute time frame, I entered long into this market because I wanted to see those equal highs being taken out first. Then I wanted to ideally see those two fair value gaps being filled. And if we drag a Fibonacci tool right over here, we also see that we just hit the optimum trade entry, as we did yesterday, basically on this little reaccumulation, just tiny bits above our previous day's low, where we also hit our optimum trade entry. So this could have been your entry short into the market right around here, with your stop loss above your swing high, your take profit target. You could either use Fibonacci extensions for that. And another great thing, let's get rid of my 2 long positions here, they're not really relevant here. If we turn on now the Mas7er indicator, we see that we slowly worked our way back into our overnight range. So basically what we formed is we could see a little trend line form. We could say where we're going to draw it. Let's draw it like this. Our first 2 lows we are using as key areas, and we're just extending that line out. We bounced off this little support line 1, 2, 3 times. We wicked into our IDR range again, and now if we measure this move outside of our overnight range, which would confirm our short bias for at least the London kill zone, we could be looking forward for a optimum trade entry of this swing, because we already moved inside of this bigger fair value gap. Of course, that would have been nice if we would have received a further pullback, but sometimes we do not pull back into those high fair value gaps. So yeah, we hit our optimum trade entry right here. So this could have been a very nice entry right around here, with your stop loss, like I said, above the swing high for a 25 tick stop loss. And then we can use the Fibonacci extensions right here. Let's go for -1 and -2 deviations of this range. So our first target for a full deviation would be all the way down here. And if we use the DR range, so basically from the IDR high to the IDR low, we would have hit 1 full extension already right on here, which would have earned us a 2.6 risk to reward ratio. So in my opinion, this was the most recent valid setup here on the S&P 500 futures chart based on ICT concepts and the Mas7er DR IDR version 1.3 model. Because we measured out this range, we closed below this range, so our bias is bearish, at least for this session, until news hit the market whatsoever. Huh, beautiful. Actually, that news scan, I just saw it. Don't want to skip ahead because we're doing some sort of a recap. Also filled in a little fair value gap. Let me actually use the fair value gap template, and now we instantly got rejected from this fair value gap, continuing lower and lower. We will see the news impact, I'd say, was not significant compared to what we had on Monday during CPI and on Tuesday during FOMC. No, Tuesday was CPI and Wednesday was FOMC. Today's Thursday. Messed something up here. And yeah, so I'd say this was the most recent valid entry. We already hit our first target of a 4 standard deviation of our DR IDR range. Our next target would be sitting right here at a second deviation. Let's turn on the levels so everyone's able to see that. If we use the Fibonacci retracement tool based on the DR range, so basically the wicks, counting in the wicks, we would see that we already hit a full deviation as well right here with this 835 low right here. So let's check if we already hit the 0.5, a 50% level line. We did not hit that, but let's turn on the minus 0.75. Yeah, we already hit the minus 0.5 target right here. As soon as we closed on a 5-minute chart, closed below our DR IDR range. And where did we hit it and where did we start to go sideways? Inside this old 4-hour fair value gap from Monday. That's why it's important to drag your unfilled fair value gaps from, for example, the beginning of the week out until towards the end of the week. Today's Thursday. So we see we still reacted based on this level. And we pulled back into our optimum trade entry sitting right here. I'm not sure. I don't think we had a volume imbalance between those two. We just touched this upper fair value gap, which is fair enough for me. I mean, we would be looking for a reverse opportunity around the optimum trade entry according to ICT's models and ICT's concept. And we basically just slowly worked our way back up into this area. So that's a dead giveaway, usually for me at least, that this is not a reversal trend, that this thing is likely not to reverse, because buyers really have a hard time moving prices up higher. Every time they move prices up higher, they're instantly being rejected. They move it higher, rejected. Move it higher, rejected. Move it back up higher, rejected. Push it back up one last time, consolidate, get rejected. Hit our target of a 4 standard deviation of our DR IDR range. So if you are a smart money concept trader, you shit, I just realized I did not record it. That's super annoying. I'm clicking on record right now, start recording. That's annoying. That would have been nice if I would have recorded it, but I mean, it's the first time, so we will improve slowly, step by step. So what I wanted to say, if you would have taken this short based on this optimum trade entry here, based on our overnight range, you wouldn't even have to watch the price action that's happening now from 9:30 until 10:30 to wait for our DR IDR during the New York kill zone to be formed, because you already would have hit, as of right now, a 3.76 risk reward trade. If you risk 1% based on this 25 tick stop loss, you almost made 4% for the day. And if you daily compound this, it's over the whole year, the results are going to be insane. I think recently I played around with my calculator a little, and we're going to continue lower. And I calculated the daily compounding effect of basically compounding 1% profit per day. And if you compound 1% profit per day over the course of a whole year, and you only count in trading days, so we roughly have 260 trading days per year, so weekdays from Monday till Friday, you can So adding everything up, compounding 1% daily profits, you end up to basically 15 to 20x your account every year by just compounding 1% profit per day. And of course, sometimes you lose. You can't avoid losing days. But if you have a day like this where you already made 3.76% profit, even if tomorrow and the day after tomorrow, let's say for example you're just placing one trade per day, and you have to make sure that this one trade per day that you're placing is a very high probability setup. If you do this, for example right here, now after the London kill zone, this trade opportunity would have happened at 7:40, so 20 minutes prior to 8 a.m. So usually when people reference that the New York session is starting, or at least the AM session, yeah, 3.76 risk reward, that would have been 3.76% net profit for your account. Even if you lose tomorrow's trade, you're still good on track to at least compound on average 1% per day. And if you keep doing that, just sticking to it and really being dedicated and showing some discipline, you're actually going to at least 10x your account over the course of the whole year. And I mean, come on, who does not like a 10x on their account per year? All you have to do is be consistent, don't overtrade, only look forward to maybe take 1 or 2 trades maximum per day. And that's how you really can make money. Because what most traders do is they enter long here, then they enter short here, then they enter short here, they entered long here maybe because they made a mistake, and they basically just over trading, and or they're losing trades basically diminish all their winning trades. So they look into their account history and they see, okay, I had lots of big winning trades, but even more small losing trades, and all those tiny little small losing trades ate up all the profits he made. And that's basically my story. That's what I had to deal with, and the solution for this problem of having too many small losing trades, which are actually eating away all your big profit trades. Yeah, and a simple answer to that, or my suggestion would be to reduce the amount of trades you take per day, and yeah, you're not gonna have a problem anymore. Simply comes down to the fact of over trading. I hope you understood this. Let me go back to Discord. That's still going on, back testing, launch number 4. So yeah, in my opinion, the best thing you can do is to reduce your maximum amount of trades per day down to 2 trades. And really, I mean, let's say you only have 2 or 1 opportunity per day to enter into the market. You wouldn't enter based on a tiny weeny fair value gap with almost no confluence. You would wait for the best setup. You set your limit order, for example, as we did right here. Let's use our Fibonacci extension from this swing high that formed a new lower low all the way down till here. And that's where we hit this optimum trade entry right on this wick here. Based on the ICT model, we slowly made our way back up, which gives you even more confirmation that the sellers are still having control over this market, because every time price tried to move higher, or basically buyers tried to buy prices back up higher, they instantly got rejected from sellers. Moving it up higher, rejected. That basically tells you that, for example, smart money traders, or I don't know, traders that are simply profitable, they start to accumulate short positions right here, and they wait for those dumb retail traders basically to move prices up higher, and all they're going to do is they're entering big short positions and slowly but surely filling up their net positions until they have enough. Let's use one more little arrow down right here. We hit the optimum trade entry and price just tanked on them, on all those buyers who were hoping that price is going to continue, I don't know, maybe in some of those fair value gaps up here from 235, 240, basically from the early New York kill zone. Do fair value gaps get filled by wicks, or does it have to be a body? It really depends on the setup. Sometimes a wick is more than enough, because prices are always fractal. So if you watch a 15-minute chart and you see a fair value gap, and that fair value gap has only been filled with a wick, I'm pretty sure that within this 15-minute candles wick, there has been at least 1 or 2 or 3 1-minute candle closing inside this fair value gap. You always have to remind yourself of that. So maybe I can find an example. So here we are on a 5-minute time frame, and we just, I don't know, maybe on a 1-hour time frame. If this would have been a 1-hour time frame fair value gap, a 1-hour candle might have only wicked inside of here and continued further to the downside. But on a lower time frame, the whole market is fractal. I hope, Mr. you understand what I'm trying to say here. So let's say on a 1-hour chart, you have this fair value gap, and you only see a wicking into this fair value gap, and then prices continuing further to the downside after it hit this fair value gap. That's not beautiful, but it is what it is. But if you break this wick down on a lower time frame, I'm pretty sure that we actually formed a few candle closes inside this fair value gap. For example, it would look like this on a 1-minute time frame. A few more candles, maybe a doji, and then a last wick, and then we got this rejection. So this, for example, how a 15-minute chart would look like, where we just see a wick into a fair value gap, but on a 1-minute time frame, we actually see 1-minute candle closing inside this fair value gap. All right, let's get rid of all this stuff. Great question, by the way. All right, where are we at? We just hit the 0.5 standard deviation of this most recent swing high here prior to our 8:30 news. Let's actually get rid of that. So we had this fair value gap. We touched our optimum trade entry right here. Let's actually make a little label. Optimum trade entry. What else? What other confluence did we have on this trade? We had a 5-minute fair value gap. Price slowly going higher. Rejected on its way up. We formed a little trend line, and what I'm saying with price slowly going up higher and rejected on its way up. So every time we had a push into this fair value gap, we've been rejected. We pushed up high again, rejected, pushed up higher, rejected, but we still made higher lows. But I mean, if you look what happened prior to this little walk up into those fair value gaps, just a sell-off basically starting from 1 a.m. New York local time. Please switch off your audio. Yeah. And free run up on liquidity. Yeah, you just have to mute everyone who's interfering with the stream. You can also just watch it on YouTube. I think on YouTube you will not be bothered by anyone not muting their mic, basically. All right, so right now I'm not really interested in taking any trades. I'd say we wait for our DR IDR range to form, which is going to be from 9:30 a.m. until 10:30. I'd consider this news impact from 8:30 as not worth to mention. Basically, we just formed a doji here, so I'm going to get rid of this. But we had a beautiful entry opportunity prior to the news, right below our previous day's low. This also comes into account if we regard this. So we consolidated around our previous day's low, pulled back into this gap, got rejected, left behind a new fair value gap here on the 5-minute time frame, moved into this old 4-hour fair value gap from Monday. Let me actually write in here, 4-hour fair value gap Monday. So very nice and clean price action here on S&P 500. We are making it at the bottom, and we make it an orange as well. That's our 4-hour fair value gap from Monday, from the beginning of this week, where we went sideways for a little bit, and then buyers stepped into this market, pushing price up higher, sellers stepping in, all on its way here to the upside, filling in this 5-minute fair value gap. We hit the optimum trade entry right here. We also touched this upper fair value gap right here. we did not touch our previous day's low, but we had enough confluence right here for a very simple trade here to the downside. I'm just going to draw the fib for one last time. I'm drawing the fib from this most recent swing high. We also worked our way back into the lower DR IDR range. So if I'm highlighting this area, that's our DR IDR low overnight. Let's make this a red color. So you see that we worked our way back into this range. We closed above it, yes, but we just touched the optimum trade entry basically, where you could have placed a beautiful limit short entry with your take profit target at a 0.5 standard deviation. Or if you're confident, you can simply just take partials, maybe take one contract right off here and trade it on the way down to a full deviation, for example, for a 5.5 risk to reward. Now, I'm also curious if it's going to work today. I mean, it already worked today if you really consider the setup we already had here on the overnight range, where we basically just had a short continuation. But what I'm expecting is that we might not get another continuation short during the New York kill zone, because the question I like to ask myself prior to placing any trades is, okay, who is in profit right now? Who's in profit right now? If you look at this chart right here, who's in profit? Is it the buyers or is it the sellers? And which sellers? So basically, Asian traders could still be considered as currently profitable in the market, but it's mainly people from Europe and London. Basically, the whole London kill zone was a move to the downside. And then I'd say at 4 a.m. New York local time, so towards the end of the London kill zone and the beginning of the mixed session right here, we had a small pullback reaction of this 4-hour fair value gap from Monday, filling in those 5-minute fair value gaps for a continuation move to the downside. So I'm not sure, I just have this feeling for today that we might actually see a little stop hunt to basically liquidate all those traders that are still in a winning position. So basically, at whatever point of time you would have sold during the London kill zone from 2 a.m. until 3 a.m. here, you are still running in profit. So those early traders here at the beginning of the London kill zone are running in profit, and I think they're likely to be hit. Okay, what did you send in here, Dart Trader? Micro E-mini S&P. This was yesterday, or what time frame is this? This is a 1-minute chart, I assume. Yeah, basically the same entry I just showed here on this chart. Beautiful setup. We had our ODR being formed right here with all those confluences, yeah. M1, M5. So I also would say that this is the optimum entry you could have taken. So congratulations to everyone who took this entry. I unfortunately missed it because I was preparing for the live stream. I only caught a few small long positions into this fair value gap. Risky, but I considered it worth it. It still was a 2-to-1 risk reward ratio, and my target for the day is to make 1% profit per day over the whole year on average, and I'm happy. No worries, I enjoy it too. It also helps me, so if I'm trading live, I used to perform better than actually if I'm trading by myself, because if I'm trading by myself, I actually catch myself taking some trades I really shouldn't be taking, and I'm just taking those trades most of the time out of boredom, out of complete boredness. I'm sitting in front of my computer, I'm like, oh, I'm not in a trade right now, might as well, here's a fair value gap, and then I'm just doing unnecessary stuff, you know. So yeah, I don't mind about tipping me. I'm doing this for free. I enjoy it so much. I'm still learning as well. All right. So now we're basically just waiting for our New York kill zone DR IDR range to form. Now we're back inside this 830 fair value gap here, or 815 fair value gap. but I'm really not sure if we're just going to get a down day. Let's have a look at a daily time frame to see where we're currently sitting at. Maybe this is going to help. All right, now actually we're going to open up a new chart for this. No, we're not. My internet connection is too slow. So if we turn on all the labels, I'm going to remove all of them. That's for example, if you do multi-time frame analysis, I'm not sure if everyone knows, but I don't know, when I found out what this visibility tab here for all the indicators or drawings on your chart is actually for, I was really stoked about it, because I always had those problems, because I do my analysis on a 1 minute time frame, sometimes even a 15-second time frame, and I don't want those things to appear on a daily time frame. So what do? You hold down Control and you mark up all those items, you click on settings, and then you hover over this tab visibility. Then you can actually select where you want to see those drawings. So for example, I don't want to see those specific drawings on a hourly chart, a daily chart, a weekly chart, and a monthly chart. I only want to see it on a minute chart and a seconds chart. And now if I look at my chart, none of this is there anymore. Hang on, the stream is full again. I came prepared today, so hang on. There is a link, copy link. Come on, I'm restreaming into YouTube because there's no limit there, so no one's missing out today. So we just wicked tiny little bits above our September FOMC news event right here. So this is also a FOMC news event that happened here on Tuesday. All right, so we wicked above this one here. We got rejected again from our daily trend line that's basically connecting all those major highs we had in this current downtrend. So let me actually highlight them here quickly. Control copy. So 4 times already we've been resisted by it, and we did not close above this downtrend line on a daily time frame, which is a pretty significant indication. So if we look on a daily time frame, where's the liquidity for today, or maybe tomorrow, or for the rest of the week? I'd say here this is a equal low sell side liquidity, equal low sell side liquidity. Let's make this in the color red because it's sell side. We are making it at the bottom. We're going to color the line in red as well. So that's our equal low sell side liquidity right here, which is also a fair value gap here on the daily time frame that we already wicked in before. So this would be a bullish fair value gap. I'm not going to drag it out, because if I'm dragging it out, there's always so much on my chart, but I'm aware that we have a 1 hour fair value gap basically right here. We can also use a few lines to represent this fair value gap. Make it a bullish one right here, dotted line, so it's not in our way on a lower time frame. So this is the top range at the bottom and the top of this fair value gap, and we're still bits, yeah, let's say bits around it. All right, so here was the rejection of this level, and here was this rejection right here. So I'd say the next target for liquidity, since we took out the buy side liquidity here, let me actually name this here as well. This is buy side liquidity. 13th September FOMC. Let's make this in yellow here as well, so everything's matching up. So we took out this liquidity here. So I'd say most of the buy side liquidity has been taken. We took out the high of the 1st of December right here as well. We can also maybe draw this line. I think we trapped enough traders long here, so in my opinion, the next target is going to be this equal low sell side liquidity. That's the only thing that's on our way down, we can also check a weekly chart to see if anything else interesting is about to be forming. I don't really see it coming. Nothing else. We also have those major 2 lows right here that we also see on the daily time frame. Let's check a 4-hour chart. Now we see all the stuff again. So what I'm doing is, because I don't want to see it on this high time frame, simply marking it up, going on visibility, and I don't want to see it. Maybe I want to see it on a 1-hour time frame or 2-hour time frame. So I'm typing into here, and now it's all gone again. So on a higher time frame, go back to the daily. I want this fair value gap, this line, and this line for the buy side liquidity. I want to see it on a 4-hour time frame, so I actually have to enable hours and drag it down until, no, I wanted to see it on hours. I don't want to see it on a minute time frame, neither on a second time frame. All right. And this way you can actually work really well with TradingView. I really started to like it once I found out that you can actually do a multi-time frame analysis without having to delete your lower time frame analysis if you're analyzing it on a higher time frame and vice versa. All right, so we have our sell side liquidity forming right here. We have fair value gaps into the bearish direction here on a 4-hour time frame. So we are going to write for our FVG. We're going to make this in orange again. We're also going to use a orange border, and we remove the background. I like to keep them like this. So that's our 4-hour fair value gap right here, and we have another 4-hour fair value gap right here that we could be looking at for our fair value gap. We have our sell side liquidity still somewhere around this area. Let's refine this line here as well. So this is our overall next target, the sell side liquidity. I'm not sure if we're going to hit it this week. I mean, we already had 2 high impact news days already, Tuesday and Wednesday. So I'm not sure if we're going to hit it this week, but maybe next week, who knows. But I'd say this is the overall short-term target, not short-term, I'd say long-term target. All right, let's continue breaking it down on a 1-hour time frame. Do we have anything else out of those 2 4-hour fair value gaps? I mean, we already broke below those ones here. We could consider this as a bullish order block, but I'm not sure. I think bearish is bias, so I'm not going to bother about drawing in this order block. All right, now we're on a 1-hour time frame, and we can see if we have some 1-hour fair value gaps that are still being, we could still be looking forward to target, at least for today. All right, that's an old fair value gap, 1-hour FVG. We're going to color this in white. Border is also going to be by the template. That's a fair value gap, a 1-hour fair value gap right in here. And that's why I don't need indicators to show you fair value gaps, because if you use an indicator, there's no actual learning process behind it and you don't remember it. If I'm walking away from the chart and I'm going back to the chart without my indicators on, because maybe I'm checking it on my phone or on my iPad quickly while I'm on the go, because I'm using the same TradingView account, I have all the charts I'm drawing up here on my computer anyway, but I also know where we're currently at because I actually take the time and put in the work to draw all those levels into, or basically onto my chart. So if you just use an indicator for it, I'd say you're not learning as much, or at least you're not remembering everything, because then if you're trading on a 1-minute time frame and you see those 1-hour fair value gaps, you actually don't know if they're really this important. That's just my opinion about fair value gap indicators. I don't think they're really necessary. All right, other than this 1-hour fair value gap, we have nothing else that's still running. We have our December low, which would be right here. So this is our December low, right below the sell side liquidity. So we could be looking forward to make a new lower low on our monthly chart as soon as we break the sell side liquidity, which I think overall is going to be our target. All right, let's also draw in our 1 hour fair value gaps right here. So that's our 1 hour fair value gap here. And another 1 hour fair value gap from here to here. So inside this 4 hour fair value gap, we have 2 smaller 1 hour fair value gaps. Nope, we don't want this. What's this right here? That's the swing from yesterday to the upside. So there's no 1 hour fair value gap in here. All right, I'd say that's everything. We have 2 1 hour fair value gaps inside this bigger 4 hour fair value gap. So let's break it down to a 15-minute time frame. I don't want to, no, don't worry about it. So right now we're inside this old, already filled 1 hour fair value gap in here, where we also have 2 smaller 15-minute fair value gaps inside this 1 hour fair value gap. So that's also really interesting to see. Let's see if we can actually break below it. And then I'd say our next target for sell side liquidity overall would be right here, at least for today or tomorrow. Sell side liquidity. Make this a thick red line as our overall target. And then we have our equal lows right here. So that's our longer, well, our, let's say, higher time frame sell side liquidity target. Or is that? Yeah. And then we can start to fill in this, I'm not sure what news event it was, but it was on the 10th of November. And there's also a huge fair value gap that has not been filled ever since it has been created. And it's big too. This fair value gap, this huge news candle where everyone thought that this little price action pattern right here is ending up to form a bear flag. So I could imagine that many retail traders actually, or that trade those patterns, position themselves short within this bear flag to get the short continuation, or maybe they had sell stops placed somewhere around those levels that all have been triggered. And yeah, then we got this massive move to the upside. So we still have this fair value gap left over to fill from here to here. That's a 15-minute fair value gap. And I'd say that is our next destination, in my opinion. So this is also sell side liquidity. Let's color this in red. Text, sell side liquidity. So now we did a beautiful higher time frame, starting from the weekly basically, down to the daily, down to a 4 hour, down to the hourly, down to the 15-minute. And now we're going to be looking at the 5-minute and wait for our DR, IDR range to form. All right, so now let's break it down to a 5. Yeah, our targets. This was our entry short, right? Come on. Too much stuff on my chart. We already started, so we can get rid of this as well. We got rejected again from this 5-minute fair value gap here. All right, so this is our 4 hour fair value gap from Monday. Let's drag that over here. This is a minor trend line that I charted up for this short trade here, basically showing this little support area to pull back into this fair value gap. We have our, this is a 1 hour fair value gap in here. This is a 1 hour fair value gap in here. We had our optimum trade entry right here. So this would have been the optimum trade if you, for example, just started watching the stream. This is, I'd say, in my opinion, the best trade opportunity you'd had for the whole day if you missed all those opportunities during Asia and London. Right here, this major drop to the downside. We got a beautiful, you could consider it a reaccumulation short, filling in those fair value gaps right in here. We hit the optimum trade entry of this range. So if I color those 2 lines in yellow, 0 and 1, of this range, forming a new lower low. So from this swing high to the swing low right here, we basically hit our optimum trade entry right here, and our target could have been a 0.5 extension from this move. And also we had our overnight DR IDR formed right here, just above this 1 hour fair value gap, forming a 1 hour bearish close candle. Then we close below our DR level right here, and we already hit the 0.5 extension of the DR IDR range. So if we use the IDR fib extension right here, this one from here to here, we see that we already hit the 0.5 extension right here. And if we use the DR high and DR low, we see that we made a very precise touch of the 0.5, negative 0.5 standard deviation. We pulled back into our IDR DR low. So if I'm getting rid of this fair value gap, and where's the other one? This fair value gap for a second, which was also a 1 hour fair value gap, if we remember right, from our higher time frame analysis. Right here, this is our area where we would be, according to, if you just consider the DR IDR range and we ignore everything else, this would have been the entry. We broke below it, we closed below the DR range, we pulled back into this area here where we also had 2 fair value gaps, pulled into it, got rejected. So you could have entered short here, here, and here, slowly building up a position with your stop loss above this high right here at the 50% level, with your take profit target at 1, 1.5, 0.5 standard deviations to the downside. Yeah, so please, remember to mute yourself when you're joining here on Discord. Otherwise, you can also watch it on YouTube if you want to. Oh, I'm thirsty. And you can also see with this little pullback here, we formed almost like a channel, and every time buyers try to bring prices back up higher, sellers stepped into the market and price went down, got rejected. Rejected, went up, rejected, went back up, rejected, went back up again as well, rejected. And then we hit our take profit target. This was the 8:30 news candle right here. This doji basically filling in this fair value gap from the low of the 8:10 candle or to the high of the 8:20 candle right here. This little fair value gap got filled in and got retested again as well with this candle, massively rejected from this candle. We could be looking if this double bottom inside this 1 hour fair value gap right here. If we zoom out, we see here we have a 1 hour fair value gap. If this fair value gap is actually holding some support, and we see some sort of a double bottom pattern working out here, to maybe retrace a little bit and liquidate all those traders that are already running in profit from the early Asian or late Asian, early London kill zone, before making our move down to our sell side liquidity from this low on from basically Monday. Was this Monday, 12th of December? Yeah, basically from our beginning of the week's low. So I'd say this is our next sell side liquidity target on our way down. And the next target would be the sell side liquidity based on those 2 weekly, daily lows right here, where we have this big 15-minute fair value gap below from our, I don't remember the date now, but we just looked at it. Where is it? Must be somewhere over here, to fill in this huge fair value gap also after a big news release on a 15-minute candle. So we have that sell side liquidity right here, based from this low and those 2 touches right here. And right below it, we have this 15-minute fair value gap. Yeah, I'm recording it this time. I missed the first, I would say 25 minutes of recording it, unfortunately, where I was going over my trades during yesterday's FOMC news event. I can recap them shortly if you want, because we are still waiting for our DR IDR range to form, but I could imagine that we see some bullish reaction of this 1 hour fair value gap. I would be surprised if we just continue falling down even more, continuing, taking out sell side liquidity, because there was no stop hunt for any of those traders that actually went in short to the market right around 1 a.m., 2 a.m. when Frankfurt market opened up, or 3 a.m. New York local time when New York Houston opened up. There was no significant stop hunt. We still have this 1 hour fair value gap sitting up here, and another 1 hour fair value gap that has not really been filled in since we tested it. It is also just sitting above the previous day's low. So yeah, this is also very interesting. This is our previous day's low from 14:30, so half an hour after our FOMC news release. This is the level where we also got rejected from right here when we had this pullback into our ODR, so our overnight range, rejected, and yeah, entry short target. Any audio? What do you mean with audio? Yeah, audio should be recorded with it, pretty sure. Or what do you mean with audio exactly? So as of right now, I'd say your best bet is to be patient, to maybe see if we get a short setup to take out the sell side liquidity from our Monday low, basically right here when we started. According to New York local time, this is Sunday, because markets are opening up late Sunday in New York time. All right, I'd say this would be the highest probability trade, or maybe a reversal opportunity back inside those 1 hour fair value gaps right up here. We also have lots of 5 or 15 minute fair value gaps inside right here, so I'd say my bias for the day would be long, unless we have a down extension day where basically the Asian range is above the London ODR range, and the New York range is also below this London range, and we're just going to keep trending further to the downside, taking out the sell side liquidity target. So let's move it up to a 15-minute time frame. I'm hearing anything. I'm hearing anything not. Maybe because it's being restreamed by other people. There are two other people basically restreaming my stream live on Discord. So if you don't hear me, maybe check it out on YouTube. Maybe it works there. All right, guys. So I'd say this was the IDR trading entry right here based on the IDR low, taking it down to a full deviation. We did not close below a full standard deviation yet. So this could also be a sign that we might be reacting bullish of this 1 hour fair value gap. So let's go to a 5-minute time frame. We found a beautiful pin hammer right here. We also did not close below the -1 negative deviation to the downside right here on a 5-minute chart. This could also be a sign of strength right here, but we are just roughly 2 minutes away from, oh, I have to plug in my computer. We're also just 2 minutes away from the 9:30 a.m. opening right here. What does this little headlines for you? Wall Street set to open sharply lower on angst over hawkish Fed. Nasdaq Composite, some muscle under the surface, futures slide as hawkish Fed quashes policy. All right, so yeah, 2 minutes away from stock market open, so we will watch and see what's happening and watch our DR IDR range to form until 10:30. You can't hear me on YouTube. All right, why would that be? Well, anyway, I'm uploading this recording afterwards on this stream, but this does not make sense at all why you can't hear me on YouTube. Let me check it myself quickly. Can you hear me? Yes, loud and clear. Let's see if I can hear myself. I love this part. Yeah, I can hear myself. Quickly mute it. All right, how many minutes are away? Okay, 9:30. New York stock market is opening up. Let's see this reaction of this candle. Let's get rid of this line so we can all actually see the wick. I wouldn't be surprised if this double bottom right here is holding up. All right. 9:30, show me what you got. Have you taken any trades today during the London kill zone or the Asian kill zone if you're up really early, or maybe you're from Australia and Asia is starting at, I don't know, I think 6 a.m. in the morning or 7 a.m. in the morning. I used to live in Australia for quite some time. I'm going back there in late February, and Australia, or at least Perth, is a really nice location if you like to trade 24/7, because basically when you're waking up in the morning, you see the Asian kill zone, and after lunchtime, I think around 2 or 3 p.m., you will be able to trade the London kill zone, and I think right around 9 p.m. local time in Perth, you're also able to trade the New York kill zone. You're just not able to trade a late p.m. New York kill zone session. But other than that, if you like over trading, move over to Australia. It's great. Oh, I'm going to take a quick break, filling up my water bottle. Be back in a minute. All right, we start to get some rejection here from this fair value gap. Let's see how this 5-minute candle is closing. All right, and let's open up a indices comparison chart. Yeah, everything's still running. We want 3 columns. We have ES1. We want to see NQ1 as well. And we want to see YM1. Yep, this one. And let's compare it on a 15 now. Let's do a 5-minute time frame. 5 minute, 5 minute, 5 minute. Let's get rid of this volume. We don't really need that right now. And let's do some charting on all of them. So right here we have this fair value gap that we tested 3 times already and got rejected from again. Maybe targeting that sell side liquidity we drew up based on our higher time frame analysis. This is basically Monday's low, the sell side liquidity, which would be a target if we get completely rejected here. All right, let's go back to our charting over here. I did not expect this fair value gap to hold a third time, to be really honest, but I guess sometimes the market is still open for surprises. All right, let's see if we can hit that 4-second negative second deviation here of our dealer's range, basically. So now we actually went below our 1 hour fair value gap. So I'm dragging this out only until 10:30. Let's wait and see. We still basically got 1 hour left now before we can actually see a confirmed bias of our strategy, basically. So let's do some charting on the comparison chart. So on NASDAQ, we also see that we had a similar setup. We formed a short-term low right here and pulled back from the short-term low back inside this fair value gap here on a 5-minute time frame. right here. We made a new lower low, and then we continued pulling back into, we actually got into this higher fair value gap, unlike on the E-mini here, on the S&P 500. All right, let me try it like this. Pull back into this fair value gap. If we use our Fibonacci retracement tool, we search the lowest point right here. We see that we actually also hit the optimum trade entry right here. We did not close above it. We closed right on the optimum trade entry, which is a great confirmation, where you could have entered short, for example, after the confirmation, for example, this bearish engulfing candlestick, or maybe with a sell limit order right here on the optimum trade entry and your stop loss somewhere up high. Protect your stop loss a little. So let's also plot the DR IDR indicator on here. Make those ones a little bit smaller. So also Nasdaq, we closed below our DR IDR range, confirming us a bearish bias. So bias, bearish. Let's color this in red. Market is still dropping. Did we already hit our sell side liquidity target? Nope, but I guess this is the next best target to look out for. If you are in a short position already, I'd be looking for a take profit around the second standard deviation of our overnight range or the sell side liquidity. And again, the sell side liquidity is our Monday's low. So basically the current week we're in, after taking out orders buy side, I'd say this is our next sell side liquidity target. All right, so we pulled back in here. We had a bearish bias. Make a red border here around it as well. We closed below the DR range. We pulled back into the optimum trade entry of this extension right here. Left behind a fair value gap in which we wicked in right here at 8:30, our news candle, and again on our 9:30 market opening candle as well. So we had two wicks inside this fair value gap. We went a little bit above it, but I'd say if you would have used ICT concepts to enter short here, your stop loss would have either been here or somewhere up here. So you were still far enough away from those wicks here. No real danger. We hit a full standard deviation now of our range right here. Actually, let me grab this circle as well and plot it right here. We had our pullback. I like those circles because I usually like to plot market structure here, or my short-term lows at least. All right, so this was a nice opportunity on Nasdaq as well. Indices currently all look the same. Right here, or right here would have been a very nice short opportunity based on the DR or the ODR setup. All right, so Nasdaq charting is done. Let's see what else we can expect. Let's actually measure our DR range to see how far down we already are. We are waiting for our second standard deviation to be hit, which should be lining up with our sell side liquidity. Let's zoom in here quickly with the magnifier. We did not leave behind a fair value gap as of right now. Post 9:30. We could check a 1 minute chart. Oh yeah, actually we did. Quite a significant one. So this could be a entry target to enter short into the market, targeting the sell side liquidity. We have another fair value gap right here. If this move obviously was not just a liquidity grab below this equal low sell side liquidity prior to the 9:30 opening. So equal low sell side liquidity. So in case we are targeting this Monday's low, basically, those would be the areas to looking forward to take a short from. So if we measure our current range, we see the optimum trade entry is somewhere around in this inside of this upper fair value gap. So in case you are going to take this short right here, I'd be taking it for maybe a first small position right here and entering with the rest of your regular position size somewhere around the optimum trade entry or at the beginning of this fair value gap, targeting this low. Oh man, I wanted to enter short in here, but I guess that's not going to work out. We just hit this first target right here, this first fair value gap. Let's see if we get another pullback. I wish I would have switched to the 1 minute chart a little bit earlier, but it is what it is. So we took out those two equal lows, which also is, let's say, our short-term sell-side liquidity. We left behind two fair value gaps here on a 1 minute time frame, this one and this one. Upper one would have offered us a better risk-to-reward ratio, but we will see. We might actually get another pullback, hopefully, to take this short. Now, basically what they're trying to do is they're trying to trigger even more shorts into the market to basically reverse it on them somewhere right into this area before actually taking a short. Something very similar that was basically happening here. Before actually taking a short, they move prices up higher into old fair value gap areas before actually reversing it. Alright, so we are going to monitor this one right here. So I'm going to set a little alert. And I'm actually going to set a paper trading. Here, hang on. Paper trading sell limit on the optimum trade entry. Sell limit right here, and at the opening of this fair value gap as well. And another sell limit just inside this fair value gap that I again just missed. A sell limit here, just for practice, seeing which one of those limits actually got hit. Alright, let's go back to NASDAQ. On NASDAQ 5 minute chart, we left behind a fair value gap of our 930 opening candle right here that we also just wicked inside, so this could be a potential short right here. Also perhaps looking forward to target our Monday slow, which would be, no, that's probably too far away now. Should all be somewhere around the same area. So a 5 minute fair value gap on NASDAQ. Here on S&P, we already have our chart that's lining up right here. So let's have a look at the E-mini Dow Jones. Same fair value gap happened right here. Our 815 fair value gap. Now on our 930 candle, we left behind a fair value gap as well. We just wigged back inside of maybe this order block or fair value gap, whatever you want to call it. Left behind a fair value gap. So currently, I'd say Dow Jones is leading with weakness. I think NASDAQ is still holding rather strong with this little pullback we formed. We saw this pullback to an extent, but we already made a new lower low, which we did not make on S&P 500, neither did we make it on NASDAQ 100. So right now the Dow Jones or the US 30 index is leading. Perhaps targeting, let's actually bring it up. Let's go to a 1 hour time frame and quickly look for the sell side liquidity on all those pairs. So this would be our sell side liquidity target. Could also be considered a equal low. Quickly write it in here, sell side liquidity. This would be our target right here. Let's go back to a 5 minute time frame. Yeah, so we see definitely that US 30 is leading, so this could confirm our bias short for S&P 500 and everything else. I am going to just enter based on market right here to see if the S&P 500 is going to continue to go short. I'm going to keep this position open until we basically breach this candle's high. Oh, I had made a little mistake here. Our 0.75 target would have been right here. So let's drag those positions down a little for our sell limits. Okay, let's go back to YM. So YM made a lower low. NASDAQ, ES actually made a lower low as well. NASDAQ not yet. Let's quickly find our NASDAQ sell side liquidity. Yeah, please mute yourself if you are watching it on Discord, so no one else is being interrupted or disturbed. All right, so on Nasdaq, it looks like we already took out the sell side liquidity, so our Monday slow, which is really interesting. That's hence why we did not get a new lower low. So let's go back to a 5-minute chart. All right, let me open up my phone because I might also want to enter into a position. All right, do you want to load today or not? We will find out. All right, so US30 is on its way to the sell side liquidity target. We could easily see a retracement into our fair value gap right here to fill it in as well. Okay, Nasdaq already hit our sell side liquidity. Basically, the red line is referring to our Monday slow. Let's go back to watch the S&P. All right, I've got my sell limits inside. All right, let's watch and see if S&P and US30 is following Nasdaq to take out Monday's low. All right, so Nasdaq is now actually leading and US30 is lagging behind by a little bit because both of those charts already formed a new lower low. US30 did not yet as of right now. But we are going to watch S&P 500 here. Let's get rid of our DR, IDR now. Let's leave it on the chart for now. Turn on the Session Pro. All right, so our DR range is going to be over right here. So we still have roughly 45 minutes left until our DR range is confirmed. All right. Are we going to take out the sell side liquidity? This is going to be the question. And extending the DR range even further down. Ideally, I'd really like to see this retracement back to the optimum trade entry prior to taking out that liquidity. Let's look at our comparison chart. So all of the indices, there's no divergence between the indices as of right now. The only real divergence that we got is that we formed a higher high right here on both Nasdaq and US 500. Only on US 30 we failed to make a higher high. Okay, US 30 is about to hit the sell side liquidity and S&P 500 also, so we move our take profit down to our sell side liquidity target. With the I know the DR or my OTE fib levels are not based on the DR right now. They're only based on this pullback basically. So this swing high to this swing low where we pulled back into this first fair value gap. So I consider those levels here where I'm now going to mark this little circle right here as my most recent impulse to the downside. So we had our impulse pullback, taking out buy side, continuation down, going sideways here a little bit inside this pullback move, filling in one fair value gap. Unfortunately, we did not get up to our optimum trade entry. But right now, I'm looking forward to target this sell side liquidity. I'm running in profit. Nice. Lucky we caught that. So Nasdaq 100 and US 30 now both took out Monday's low. So this week's low. Now we're just waiting for the S&P to basically tag along. Hopefully we get this because I'm trading the S&P. Maybe I should have traded the Nasdaq 100, taking a short entry with this little wick inside right here. Well, that's what you get. Ooh. See the support, we did not close. Let's wait and see. YM1. Any new fair value gaps being left behind? No, not really. Alright, so here we are. Initial bullish reaction of this level. We're going to keep the trade open. Just waiting for it to take out the sell side liquidity. So 2 out of 3. I'm not sure if we, yeah, I'd say we consider US30 as taking out the sell side liquidity as well, even though it was just a wick. But we will find out. I'm going to send you a link of that Session Pro indicator. Where do I find that actually? Right here, indicators, Session Pro. It's private, that's why you can't see it. Okay, link. I will paste it in the Discord chat right here. Basically just a New York kill zone. Basically everything all here is based on New York midnight right here. That's what you see right here. Red boxes are always, you can modify the colors of the boxes. The Asian kill zone, London kill zone, and New York kill zone. You can modify it as you like, as you wish. I recommend to save it right up here as a template, so you don't have to redraw your chart every time. All right, are we looking at a important number level? 3960, 000. Pulled back right in here to swing low. Come on, let's just take out the sell side liquidity, and then we are going to wait for our DR IDR to form. All right, let's have a look at a few Forex pairs in the meantime. I'm going to set an alert below this level right here, so we know what we're looking at. Nasdaq took out the sell side liquidity, so the next target would be our higher time frame sell side liquidity, which is down here, based on a weekly and daily chart. This red line down here at 3914. This is going to be the next major number level, 3900. And down here we have a 15-minute fair value gap based on, when was this move again? I think early September or something, where we formed this bearish flag pattern, and then we basically just reversed on everyone. Should be right around this corner somewhere. Every time I say this, it's still super fucking far away. No, it does not matter. Let's go back. Is this held a fight? Yeah, perfect. We are waiting for our sell side liquidity to be targeted. All right, what we want to look at is maybe Euro USD. Does everyone know how the mute button looks like? Maybe Ethernet can arrange a walkthrough for mute as well. Yeah, I can do a detailed analysis of how to mute yourself on Discord if you're watching one of our live streams here. Okay, let's watch the sell side liquidity being targeted live. Come on. Even this really bad, real bad entry, the idea entry would have been this fair value gap right up here. Unfortunately, we did not get this higher risk to reward pullback right here, but we will see. So if you entered short right here, good on you. Unfortunately, I did not get this perfect entry because I was not looking at a 1 minute time frame here during the stream, but I still managed to get in somewhere around this level right here. All right, our profit target is about to be hit. Just putting in my take profit target on my phone quickly. at 3956. All right, that's it. And 3, 2, 1. No, that's obviously didn't work out. What's the time? Let's keep in mind that we now are looking at a 9:55 candle. So in 5 minutes, we will get new hourly volume into the market. Okay, I am taking profit. Done. Just took out the sell side liquidity. So within the next 4 minutes, we will actually get new hourly volume coming into the market. And now we're actually dropping below it. Beautiful. Let's get rid of all those sell limits. Nice little scalp right here from this fair value gap down into our sell side liquidity based on our Monday's low. So now all three indices took out the sell side liquidity. Let me actually, nope, I did not want to do this. 5 minute chart. Just so we have a reference point on all our charts right here. I'm going to pull up, and now we are dropping like crazy. Nice. Beautiful trade. Beautiful. Hope some of you caught that trade. Maybe from this higher time frame fair value gap. 5 minute fair value gap. All right, that's our sell side liquidity right. Yeah. Our Monday's low. So now we broke our current week's low. Now we go back to a 5 minute time frame and we see how we're going to react at 10 a.m. New York local time of this hourly candle. Currently we are still continuing to drop, but this could be a nice trap for hourly traders entering short into the market as soon as this new hourly candle is closing. And what we could be looking at could be a pullback, maybe still into one of those old fair value gaps right up here. This fair value gap is pretty irrelevant right now. And this one has been filled already as well. We're just going to keep it on the chart. Maybe fill in some of, maybe this unfilled fair value gap right here around the optimum trade entry. But we will find out. Now we're dropping at 9:57. So we still have 3 minutes left for the new hourly candle to open up and new hourly traders. The XY has been consolidating for the last half hour. Interesting. So currency pairs should be, yeah, they're also consolidating right now. Here on Euro US dollar, we see a beautiful fair value gap from 905 that we could be reacting from. We had a beautiful consolidation. Let me get rid of that volume. That's super annoying. We had a nice little, could say, consolidation right here. If we trap this in a little box, we obviously broke out of this consolidation quite significantly, but instead of entering on this candle close, you can speculate for a fair value gap being formed. That's what we got eventually. So what we could have done here is maybe draw a fib and enter at a 50% level of this candle, or maybe a 32.8 fib retracement, or just based on the fair value gap somewhere in here. If we break it down to a 1 minute time frame, let's see what we get. Basic stuff. So we have our fair value gap from this area to this area. So we pull back into it one time. So we could be looking at a entry right around this area, or we use a Fibonacci tool and we drag it from here to the swing high, extend it a little bit out. So here would have been our optimum trade entry. Let's check for the 50% level, which would be right here. 50%, we did not hit the 50% target, so I guess your best bet would have been to enter right here where we already would have entered. So volume imbalance is still right in here, but it's also an 8 cap chart, so I wouldn't trust it too much because, yeah, obviously it's just in CFD. It's not a proper futures contract like we are looking at right here. We still have 1 minute left before it's hitting 4 a.m. So this could have been a very nice entry to catch on this move to the upside. And if you would have missed this entry, there would have been still plenty of opportunities. We had a beautiful pin bar formation right here with a continuation to the upside, leaving behind another fair value gap that has been filled for this continuation move to the upside. To have a rough idea of what you would be able to target right here, you could simply use that consolidation prior to this massive breakout and use the standard deviations to get an idea of for a measured move. So we can simply go -3 and -4 standard deviations. Color this in green as well. Right now we already hit the 4th standard deviation of this move, so this could have been a very lucrative breakout if you would have caught onto this move. So you had 2 opportunities, once in this fair value gap right here, this fair value gap right here, and now we would have to look what's around us basically and what the DXY is up to. That's going to be the new high of the week, I'd say. We just wicked into this fair value gap down here, this massive move. I guess that was CPI news last Tuesday. Yeah, so now that's currently Euro US dollar. I could assume that pound US dollar is looking relatively the same. Let's go back to our indices right here on ES. So we still see all indices, all 3 of them are dropping. We now hit 4 a.m. New York local time. Not 4 a.m. New York local time, that's 4 p.m. my time. Right now it's 10 a.m. New York local time. So let's see if this downtrend is going to continue or if they're reversing it based on this rate of the sell side liquidity. Let's check our better chart here where we have all our analysis. Just for a clean look, that's currently what our range is looking like. So we already left behind a few little fair value gaps on a 1-minute chart. Let's check a 5-minute chart here as well. That's currently our New York kill zone range with a fair value gap on a 1-minute time frame somewhere up here. That is likely to be targeted, but we will see. All right, let's wait and see. Yesterday, while I was doing some back testing, I discovered now that it's even easier for gurus and I don't know, people that want to sell them their program or their coaching whatsoever. They now have it way easier to actually fake their trades on TradingView. All you have to do now is simply go in replay mode, be connected to paper trading, and you have to have a premium TradingView subscription. And all you have to do nowadays is to go for replay mode. Okay, we got the breakout, we got our pullback, I bought right here. All right, we got another pullback in this fair value gap, I bought again. Pulling back up, and that's exactly where I sold one contract and the other contract right here. And now if we click on hot, no one would be able to tell. The only thing you would have to do, you wouldn't need any Photoshop skills anymore to basically, in case you are faking stuff, basically pasting all those things in here. You could only thing you would have to do is get rid of this little information button here, only take a screenshot of this whole range, and you look like the most profitable trader to everyone. Just putting it out there for you to be aware for it. So got a whole lot easier to basically fake your trades. Yeah, live recording is the only way from here to do it. That's 100% true. All right, we're still dropping on all indices. So this is the only real divergence that we got right here prior to 9:30, this 9:30 opening, where we made a higher high on NASDAQ and S&P 500. For the rest of the time, we've just been continuing further to the downside. So that's really great. I'm still running with one contract. I did not expect it to drop by this much, but it is what it is, and I'm glad about it. All right, let's turn on all our chart mess here. This is going to be our next target. I mean, looks like we could already be hitting it today. This is our daily, weekly sell side liquidity, our next major target. Let me zoom back in. Based on this daily chart right here, those two equal lows for sell side liquidity, or on a weekly chart, making it even more obvious, those two relative equal lows. On a daily chart, we also have a beautiful fair value gap right below this equal low sell side liquidity. So I guess we're likely to take it out maybe even today, since we already took out the short-term weekly low, current week's low sell side liquidity. So let's go back to our 5-minute chart. Just for the ease of it, we are going to turn off all our drawings right now. We know that we took out sell side liquidity already. We know that we have a fair value gap somewhere around here and here. I think to better draw it up, I'm going to open up a new tab. And I'm trading it based off the March contract, ESH 2023. We're going to plot our DR IDR indicator. So this was the ideal entry opportunity for the overnight range here, with this beautiful trend line, a pullback into the optimum trade entry based on this impulse right here. We also pulled back into the IDR low, DR low right here, where you would have had enough opportunities to enter short into this market. We also hit the optimum trade entry if we're extending out this range. That's exactly where we hit the optimum trade entry based on this move to the downside, which was lining up perfectly with our DR low and DR high. We did not hit this fair value gap right here to the upside, but we filled in this fair value gap. Let me get rid of those two fair value gaps. They're not going to be as interesting. I'm coloring those two in a red color for the DR low. This would have been your ideal entry opportunity. Would have already hit 2 standard deviations for a. Can I ask how much you risk per hour in dollars? How much I risk per risk to reward? I'm always risking 1% per trade. Only on high volatile impact news days, I'm sometimes lowering it down to maybe only 0.5% risk per trade. But I try to basically risk 1% per trade, and then based on your risk reward ratio, you either make 2% risk 2 risk reward would mean a 2% net profit, or a 3 risk reward would mean a 3% net profit. DXY pumping, so we should see euro US dollar dumping. No, we are still in replay mode, I guess. Profit in cash, 100% success rate. That's what we want to see. What we could be doing right here now is we are pulling up the DXY. We're using a new price scale. What I'm always doing if I'm looking for SMT divergences, I'm going to invert the scale. And I'm using this style right here with a set of line. I'm using candles. Then all you have to do now is, I think, move it a little bit, and now you can watch both DXY and euro US dollar on the same chart and check for SMT divergences. So we found our high on the same candle. We're already below this fair value gap on the DXY, not on the euro dollar yet. And that's how I usually check for divergences on both DXY and euro US dollar. Did we have a divergence somewhere around our accumulation? No, not really. We did not form a lower low based on our low right here at 415. So as of right now, there's no SMT divergence. All right, so we're starting to bounce a little bit right here. Now 5 minutes into the new hour. What did you know this trick? Did not know this trick. Yeah, I know. Sometimes you stumble upon those few things. You can either, for example, plot it in a, new pane, so it looks like a indicator on the downside, or you have it on the same chart, and then, yeah, I'd like to watch it, and then I have euro US dollar and pound US dollar open at the same time. And for example, if I would have seen a little move right here to the, where's my drawing? So if I would have seen a little wick going to the downside below this low, and I did not see it on the DXY, and it's still continuing into this range, it would confirm my bullish bias, and as soon as I see that breakout, I would take it long right around this area for a continuation setup, or for a riskier entry, taking a long somewhere around here based on the divergence. 3941. And I'm also inverting this scale because, yeah, if I'm not inverting it, I'm always looking at something like this, and I have to compare lows with highs and highs with lows, and that's why I decided to simply flip the chart. And just have to remember that currently the DXY is not dumping, the DXY is actually pumping, while Euro US dollar is dumping. They're inversely correlated. You don't wait for the IDR DR to confirm. I did not check the DR IDR. It really depends what strategy I'm using. I'm not just using the DR IDR. I'm currently testing it. I mean, we closed below it, so the DR IDR would have spooked you out today. So your bullish, your bias would have been bearish actually today, because we closed below. We did not have a SMT divergence, which would have been enough to basically avoid this. We had one 5-minute fair value gap right here, then eventually closed above, pulled back into our range, so this could have been a potential entry somewhere around this area in this fair value gap with your stop loss. Well, 16, let's go for a 15 pip stop loss. That should have been enough. Looking forward to target maybe our previous day's high after the FOMC news event. This could have been a realistic trade, because you're never going to be able to catch the peak and catch the absolute bottom. But this would have been a nice 3-to-1 risk to reward ratio after potentially having one losing trade somewhere around here. If you would have entered short, placed your stop loss at 50%, looking forward for that 0.5 deviation somewhere down here, which obviously wouldn't have worked. But still, overall, you would have ended up with roughly around 2% net profit here. We will retrace to the move back up. Yeah, very likely. We have all the analysis right up here. It's just a lot. That's why I moved over to this chart, where we only drew up. Let me actually get rid of those two extensions, so we only see our 0.75. Let's get rid of those deviations as well. We're not worried about those ones. So this was a nice optimum trade opportunity to take short. Right now we're still forming this 5-minute range. Let's have a look at some of those fair value gaps. We also took out our sell side liquidity below Monday's low, which would be, where's Monday's low? Is this Monday's low? No, this is Monday's low, I'm pretty sure. 15-minute. Monday, 12th of December, Sunday, yeah, right here, that's what we're looking at. Monday's low. That's a sell side liquidity, and based on our daily time frame. Oh, no, hang on a second. So on the March futures contract, we already took out this sell side liquidity already. We're now inside this big fair value gap, but on our ES1 chart, I'm pretty sure we did not take this out yet. Or did we? No, on our ES1 chart, for some reason, we did not move. Does anyone know the reason why ES1? Yeah, okay, maybe because the December contract hasn't not expired. No, it should have been expired yet. Switch to ESU 22 ESZ September, and here we had to switch over to ESH. Why is there a difference between those two charts? Because here on this chart we already took out the sell side liquidity. That is super odd, because on our ES1 chart, which theoretically should be the same chart, we did not break this low yet, and it's also still moving. We took out our current week's low, this sell side liquidity, roll over ESH to 2023. Yeah, I'm looking at that. And we had the same rollover here in our ES1. The ES1 is the continuous contract ahead. And a continuous contract ahead, starting from Friday on the 9th of December, was from the December contract, we switched over to the March contract right here. So theoretically, we should be looking at the same chart. Yeah, okay, let's say, okay, now I get what you mean. So starting from the December contract, we did not take it out. ES1 is still on the old contract. Interesting. So the new contract already took out the sell side liquidity. Nice to know, actually. All right, so we're finally making a move back into this fair value gap. All right, let's break it back to a 5-minute chart. So this is our Monday slow. Let's keep this on the chart as well. Zoom in here again. So we have our first fair value gap that has been formed within our 5-minute range. Let's check it on a 1-minute time frame. 1-minute time frame, we had two smaller 1-minute fair value gaps inside this 5-minute fair value gap, but that's not really worth pointing out here. We had one fair value gap right here and another one that has not been tested yet all the way up here. So 10:30 would be right around here. This is when our DR IDR range is confirmed. This is our Monday slow. Sell side liquidity. Monday slow. That's what we're looking at right here. Bring it in, otherwise I have to zoom in all the time. That's what we're looking at on a 1-minute time frame. So let's go back to the 5-minute time frame. A little bit easier to digest. Let's actually draw them in as a 1-minute. And this here is a 5-minute containing two smaller 1-minute. There's also already a filled 1-minute fair value gap. So this is what we'll be looking at right now. I mean, since we already take the sell side liquidity, I could actually see a potential reversal move above all this price action today. Because so far we only went to the downside. We did not have any major stop hunts to liquidate any of those traders who took that short maybe during the early London, right around here at 2 a.m. New York local time or 3 a.m. New York local time, taking this one short, or people that entered short based on this big fair value gap here at 315. Entering short base here, or even when we entered right around this pullback in here on the optimum trade entry, there has not been a significant stop hunt to basically liquidate all those traders that are currently running in profit with their positions. So worth to watch. Now we're tapping inside this 5-minute fair value gap, and we still have 12 more minutes for the DR range to close. Check Euro US dollar. We have not formed a divergence as of right now. Here, I mean, we already closed below the swing low right here, which we did not do on the Euro US dollar chart. We also tapped into the slower fair value gap as of right now. Let's make this in a green color. Do we have a divergence between our, that's going to be interesting. So let me actually get rid of all this stuff right now, and also of the DR/IDR thing, just focusing on those two charts. There's going to be one major difference. What happened right here? So yesterday during the FOMC news event, we found a high on the Euro US dollar chart, which was rated. So we had a little stop hunt. Everyone that went short during the FOMC whatsoever, profiting on this slow but surely way down, has been stop hunted right here. If we measure out this move, this was a 44 pip move right here, a 44 pip stop hunt. Usually they're between 25 to 50 pips. What do we see on dollar, we did not have the stop hunt. So this was manipulated price action. So you can, let's say the odds or the probability is higher that this thing is going to continue further down short than going above those highs again. So looking for short entries somewhere around here would be really valid. So let's look at the DR, IDR on Euro US dollar, because I'd say this one is going to be confirmed bearish. This is a typical DXY divergence pattern right here from this high. We did not even get close. We got close to this high, but we did not break it. So with a huge DXY divergence, we found a lower high here and a higher high right here. Okay, now I can't plot both on the chart, but I hope you know what I'm trying to say here. So we could be looking at a few bearish fair value gaps, just marking them right in here already. Get rid of this little stop hunt box. All right, so bearish right in here, 5 minute. Let's grab this right here. Suck. Let's check the 1 minute time frame quickly. All right, so let's refine this 5 minute fair value gap here. We leave this 5 minute fair value gap right where it is. We go back to our 5 minute time frame, and we're going to write a little note. Big DXY divergence Euro USD. Stop hunt above previous day's high. Right here, this stop hunt. So let me actually make this a straight line again. So that's where we're looking at. That's our previous day's high. Previous day's high. I'm actually gonna get rid of the DXY for a second here. I'm switching back to futures in a second. I'm going to edit in a new pane, so I don't have to worry about that all the time. Quickly inverting the chart, making it look like a proper candlestick chart. Getting rid of this line, so now we can actually see this divergence very easily. So looking for a pullback into one of those fair value gaps, continuously taking it short, maybe below the current daily low. So this was our previous daily low from Wednesday. We already took that out, trapped volume short, basically formed some sort of a double bottom right here, consolidated, broke out, entered back into the fair value gap, continued even up higher, breaking above our overnight range, pulling back into a fair value gap right here, continuing even up higher, manipulated above the previous day's high for a nice stop hunt. And yeah, now we get a pump and dump scenario basically. So now we could be actually looking at a target to somewhere around this level. Make this in green. This is our previous day's low. And that's why previous day highs and lows are so super important. I always mark them up, always. If you see trapped volume below and we're pushing back into it, back into it, that's a great giveaway, especially if we're moving from this previous day's low with force back into it, back into this overnight range, back above it, pulling back into the fair value gap, extending this range even above this previous day high with the dead giveaway of the DXY, not breaking this high from yesterday, from the FOMC news event. And now we're already breaking the lows here on the DXY. If we look at it, let's actually make a line here as well. We're about to break those lows here. So we could actually also be looking at bullish divergence if there wouldn't have been the stop hunt scenario. And I'd say this one is outweighing any bullish divergence that could be forming right here. All right, so that's Euro US dollar. We're going to watch this, keeping track of it until the DR range finally closed. Okay, let's actually, we won't look at this chart anymore since it's the September contract now. We pulled back into this fair value gap. We're still now below the daily sell side liquidity, starting to move a little bit sideways. So we will see what happens if we compare all the indices on a 5-minute time frame. Let's turn on the DR, IDR here as well. All right, so we are looking for a fair value gap here, which would be bearish. If we break it down to a 1-minute time frame, we see we have a few smaller fair value gaps inside this bigger 5-minute fair value gap, and we have this fair value gap right up here that has not been filled yet. We have lots of like a little reaccumulation, so we could call this a little order blocks in itself in here, because if we use the volume profile, we will see that very likely the volume point of control was right around here. So this is an area where price is likely to have a little bit of, or experience a little bit of rejection, because there are actually orders in the market that are likely to be protected. So we're just going to mark up this area right here with those fair value gaps. This is a M1 FVG, and this is a M5 FVG. Go back to the M5. That's what we're looking at currently. We do not have a divergence as of right now and on any of those indices. We all formed a low at 10.05 on all 3 charts. And if you want all those charts that you're looking at in a split screen style to sync up, all you have to do is you click on the layout and what you want to sync in your layout. For example, if you want to have the same symbol on all of your charts for whatever reason ever, you click on it. If you want the same time frame on all your charts, you also, for example, if I'm now selecting interval and I'm going on a 1-minute time frame, all the charts are switching over to a 1-minute time frame. Just a little handy tip, maybe you haven't known it. Also the time, so if I'm dragging, what's time doing again? I don't know, but the date range. So if I'm selecting date range and I'm moving this one to the left, all the other ones are moving to the left or right as well. Interval, I'm gonna leave those 2 ones on here right now. So we're also going to draw up the fair value gaps on a 5-minute time frame here on NASDAQ. All right, let's make this in red quickly as well. M5 FVG, M5 FVG, done, done, done. All right, let's quickly bring it down to a 1-minute time frame. Let's see if we might have left something out. Some minor fair value gaps in here, and also this slight reaccumulation. Let's refine it to this bigger 1-minute fair value gap that has not been filled yet. So we actually have to change this label to a M1 fair value gap refined. This is our 5-minute fair value gap. And let's have a look at the Dow Jones as well. We also have this fair value gap in here that has not been filled yet. We also have this fair value gap from up here to up here. On the way down, we actually did not leave behind many fair value gaps, so we are going back on a 5-minute time frame and double check on that 5-minute time frame. We're adding our DR IDR indicator quickly for our range. So we have a M1, come on, M1 FVG, done. We have another M1 FVG just below that FVG. I'm going to leave that in gray now. And we also have that same 5-minute fair value gap as on all the other US indices. M5 FVG. So now we are actually looking at 429. So now we can wait for a confirmation of the range. If our bias for the day is going to be continuously bearish, or if we might actually not get a close below our DR range and might see a reversal opportunity here. Looks to be in discount of the range. Is that a concern? Yeah, it is in discount of the range. This could be a concern, but let's say, I mean, perhaps you also, often it occurs that sometimes it only runs into a discount fair value gap, and it's reversing completely from there. So it's always up to the trader. Ideally, if you, for example, have a rule book, so for example, you're using the strategy and you're looking for those PD arrays, so you only want to enter in a premium if you're going short, basically. Of course, you would still track this fair value gap, but you would not trade based on it. So you would just ignore it. If it's not running into your premium fair value gaps, just ignore it, basically. Would you now consider this is a bullish market structure shift on 2-minute time frame ES? I'd say a short-term market structure shift, but by the way your image looks like, we did not form a lower low. So for a bullish market structure shift, we would have to make a huge reversal, basically. Hang on, let me bring it up quickly. On a 2-minute time frame, where's the... This is not a bullish market structure shift, because for a bullish market structure shift to happen, this wick would need to be lower than this one, because market structure shifts looks like this. So we form a low, a lower high, and a new lower low. Now the important thing is, let me color this in red. So this is our downtrend. And now we start to pull back above our most recent swing high right here. So we consider this the neutral phase. Let's make it an orange. And then we left behind a fair value gap somewhere around here. This is our market structure shift above this high. So right here you see the difference. We did not made a lower wick, so that's a problem here. And pull back into our fair value gap, order block, optimum trade entry whatsoever, and continue on our way up high. This would be a market structure shift. I hope that made sense. Maybe I can copy all that stuff and all right, let's go back to our indice overview. So we see that we might be getting a close below our range right now on ES. Not on ES, on NASDAQ and E-mini Dow Jones. Let's check Euro US dollar. So now the divergence starts to form. We're now about to touch our previous day's low with this DXY divergence as stop hunt. Let me actually break this down for a minute, because I'm really curious. I like to trade pump and dumps, and this is a textbook setup for a pump and dump scenario. So if we break it down to a 1-minute time frame right here, what do we see? So we moved above our previous day's high, and let's check market structure. So we made a 1-minute time frame. So we formed our high, we formed a low, we formed some sort of, and now don't flame about it, I'm still using trend lines, but I'm using trend lines in areas where they actually work. It's not, trend lines do work and chart patterns do work if you know where to look for them, in my opinion at least. And if you know where to look for them, for example, above a previous day's high, previous day's low, in a pump and dump scenario where you also have the DXY divergence confluence, basically, that's when they work, and that's when I basically use them. So right here, this little trend line, this little wedge that has been formed right here, this breakout to the downside would have been an ideal M1 entry. Check it on an M5 entry. Also this right here, if we go back, usually how I enter on those pump and dump types of setups, which is actually hard to enter on if I'm live streaming, but would be right here after this close of the candle with this little pin bar confirmation. I would choose a 10 pip stop loss somewhere around this, capitalize on the pump and dump, and your target would be the previous day's low. That's usually how the pump and dump setup is orchestrated. And we could have also caught that breakout with the breakout out of this consolidation range right here. If we stay on the 1-minute time frame, we saw this consolidation right here, or this consolidation right in here. We obviously broke out of this consolidation, left behind fair value gap number 1, where you could have entered long here. If you missed that entry, could have entered long here. Then we closed above our overnight range after we initially had a bearish confirmed bias. So we closed above. So now you could be looking for a fair value gap to take a confirmed entry long, basically, where you could have entered right in here, or if you maybe, I don't know, missed this move, or you already jumped in right here because you had FOMO, you very likely got liquidated or stop hunted. So you even got another entry opportunity if you, for example, were still asleep or something, I don't know. Could have entered long here for this last pump to the upside above our previous day's high, where we had this beautiful pump and dump setup. Nice. Okay, we also already closed below the DR right here on Euro US dollar. So we also have a confirmed bias to the short side, to the downside. Okay, let it load. And now we'll be looking for fair value gaps to take Euro US dollar short from. So I'm going to set a few alerts. One I'm going to set right here, and the other one I'm going to set right here, so we're aware of it and we don't have to keep watching the chart all the time. So we got a wick, and now we're starting to see some divergence forming. On ES we did not get a lower low. Let me actually double check with ESH, the March contract. We did not make a lower low. We formed a higher low compared to the 1004 low here on a 2-minute chart. Let me go to a 5-minute chart. We did not make a lower low here, but on NASDAQ and the E-mini Dow Jones futures contract, we made a lower low. So this could be the bullish divergence we are looking for. So based on this divergence, we break it down to a 1-minute time frame here on ES, and we saw that we left behind a nice little fair value gap that we could be using for a potential long opportunity if price is not running away from us. So let's quickly color this in green. We place our entry right here, limit. Now, come on. All right, I'm just doing it on my phone then, or maybe here, connected to paper trading, yes. 1-minute time frame, a SPY limit order right here, in case we're returning back to this fair value gap. Based on the idea that, hang on, let me go back to a 5-minute time frame. Based on this bullish divergence setup that has been formed right now as soon as the DR range closed, but we did not get a close below it, so theoretically our bias is still to be estimated, basically. But we got a, maybe you could say, a little, I don't know, a first initial confirmation that it might wants to break lower with this wick to the downside on NASDAQ and the E-mini Dow Jones. Let's see if we get a retracement into our fair value gap right here. We're definitely already in this 5-minute fair value gap on US 30. Same for S&P 500, so we dragged this out right here as well. All right, okay. So far, so good. Unfortunately, did not get that retracement. Make this in a red color, a green color. Make that line a little bit thicker. Too many people watching the stream. We also have a YouTube stream going on right now. I think the link for that is somewhere in the description. I'm going to copy it for you. Come on, V. You can't watch the screen because it's full. There's a link in the Discord chat right now. Okay, so ESH, we unfortunately did not get a pullback into this, but what we could be looking at right now is we took our little sell side here and broke this high as well. We got back into this bearish fair value gap and this 1-minute fair value gap. So let's just wait and see if our buy limit entry is being filled. Let's go back to Euro US dollar to watch this chart quickly. So now we're inside this first 5-minute fair value gap. Yes. Our buyers, that's a tough question now. I mean, we closed right on the DR and we basically reversed from there, but I'd say our bias for the day is bearish and it's going to be so it's fair to say that we are looking for a pullback in either this fair value gap in a discount for a short entry. So we ideally be looking at for fair value gaps in a premium. I only take entries from a fair value gap in a premium with the DR IDR strategy. So in case we reverse from there, it is what it is. I only like to take those higher risk reward trades, which I would get somewhere right around here, unless we get some nice confluence right inside this fair value gap. But ideally, you stick to the rules, and if you don't get an entry, you don't get an entry. It's simple as that. All right. So maybe now we get a pullback into our fair value gap to maybe form some sort of a V-shaped recovery, double bottom reversal, entry on S&P 500. How long have we been streaming for? We've been streaming live for almost 3 hours now. Nice. I felt like 5 minutes. All right. So here's one we can practically close this chart. I'm not going to be looking at this anymore. I want to have a quick peek at GBP USD. We've got our alert set right here on this fair value gap. That's when I want to be alerted, a little bit above it. Add alert. And I want to get an alert somewhere around here. So what I want to be looking at now is GBP USD. I'm going with FXCM. Get rid of the volume. And we are going to add the DR IDR indicator. Are we getting our pullback? Doesn't really look like it. We're now inside this 1 minute fair value gap right here. We have a 1 minute fair value gap right above here. Both are inside of this higher time frame 5 minute fair value gap. That's why I did not point them out right there. Let's quickly check GBP USD. Ooh, nice. Looks completely different to what we saw on Euro US dollar. My chart is not inverted. No, it is not. No, it's not. So yeah, we can say that this is complete manipulation, a total stop hunt here on Euro US dollar chart with our DXY divergence. If we bring up the DXY again. So on GBP USD, we formed our overnight range where we had this initial drop. We closed below, so our bias is bearish. So now what would we be looking at? We'd be looking at fair value gaps. We don't see a fair value gap somewhere around this area, but we see a fair value gap from here to here. Obviously, that's a bearish fair value gap. Our bias is bearish. Yeah, I think I don't have to say anything about that this time. Let's draw our range. Let's use our basic DR range. So we actually could have gotten an entry in a premium. So if you would have taken that fair value gap, I don't know, short right here at the 50% level of our range, it would have been considered being in a premium because there was no fair value gap higher than this one. We formed some sort of a triple top pattern right here, bouncing off this, you could consider it a triple bottom. And we already hit a full standard deviation to the downside right here. So this was a pretty nice trading opportunity today on British pound US dollar. We also had a confirmed bearish bias here for the ADR, for the Asian range, but we did not pull back into some of those fair value gaps that we have left behind right here. This would have been an ideal entry in my opinion, but we got a slight pullback with our extension to the downside during early London and yeah, 3 AM opening. Pulled back into this main fair value gap here on the 5 minute time frame. Continuation to the downside. All right. So that's done. We did also close below our DR range here at 1030. So we are also looking for short opportunities here on GBP/USD. So we are dragging out our fair value gaps here on the 5-minute. Here we go, here we go, here we go. Those are our 3 main fair value gaps here on the 5-minute, where we'd be looking forward to take shorts from. Let's quickly drag our pullback. So here we have our premium. Get a full pullback back into our fair value gap, unfortunately. Only Nasdaq is lagging behind here, not having broken this most recent swing high here. Still on a lower point compared to our S&P 500 and our Dow Jones chart. So yeah, finally loaded. Fair value gaps, 1-minute time frame reframed, would have been from here to here. I'm just combining a few fair value gaps for important areas on the higher time frame. Fair value gap here, and this fair value gap on a 5-minute is actually, yeah, I mean, we could be looking at something around this level. Everything else has been filled in. So I'd say those are our refined fair value gaps. Our volume point of control is very likely going to be right around this area. So if we drag it down to a swing low perfectly at our DR high. So our DR high is very likely protected with lots of volume, so with lots of order that has been placed into the market somewhere around this area. So if prices coming back up to those levels, the interest is high that the traders or the institutions that place those trades are likely to protect those positions. And with that, our DR high. So let's get rid of that. We are just waiting for one of our fair value gaps to be hit. So we set an alert at above our 0.5 level, so we don't miss anything. But that's the analysis for GU. We can also pull up our DXY, but this time we added into a new pane. We flip our chart around, and we are going to use the candles. And one thing I have left to do is, let's get rid of this. Our previous day's high and previous day's low. So therefore I'm quickly turning on the Session Pro to get my New York time daily separators. Let me get rid of the VWAP. And another interesting thing about the Session Pro is that I coded the VWAP so it actually resets at New York local time and not when the market is opening back up during Asia. I'm not sure if it makes any difference. I just tested it out for basically out of my personal curiosity if it works better than a regular VWAP. Doesn't make much of a difference, to be really honest. So this is Wednesday, so our Wednesday high was formed right here, and our Wednesday low has been formed right there. That's where we got our retest inside this fair value gap. So beautiful price action. And our current weekly low, has that already been broken? Come on, Lord. Our current weekly low. So currently we're looking at Monday. Oh, we got executed, we got filled. That's more important now than GU. Let's go to our ESH 1-minute time frame. We got filled into our order. Let's see if it's going to work out based on our bullish divergence here on a 5-minute time frame. The only concerning thing about this is that Nasdaq did not follow us making this higher high, but we are going to take the chance and enter long into this market. Nothing confirmed with DR IDR. This is just me scalping. Take the trade based on your own risk, and we will see what happens. Okay, so Euro US dollar pulled back into this M5 fair value gap, continuing to the downside, got rejected instantly. So now we can actually see Monday slow, Monday, 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 Sunday. This is the overnight range. So this is still Friday, if I'm not correct. Yeah. So this is our current week's low. Come on, quick. So this, I guess, is the next target for our GBP USD trade. In case, so now we have a confirmed bearish bias. If we get a pullback into our premium fair value gaps, we could be looking forward to target our current week's low as sell side liquidity. Let's zoom in here a little, so we've got everything on track. Let's get rid of those two lines here. That should be enough. All right, so Euro US dollar, that's what it does. If we get a nice pullback into a premium fair value gap, would be nice as well. After we had this major DXY divergence above our previous day FOMC high. But let's watch this chart right now. This is going to be interesting. I'm going to place the stop loss 1, 2, 3 ticks below our DR low currently. Let's see. And my take profit is going to be, well, I'm leaving that open for right now. See what we get, see what price action we're actually getting. Okay, let's color this in green so no one's getting confused. Go back to our overview chart. So currently we're about to break the low on NASDAQ. So let's hope this was not an indication that this might actually be a trend reversal instead of a continuation based on this bullish divergence we had previously. But we will see. So we filled this fair value gap in completely on the tick. So let's watch and see. Let me go through the chats quickly. Maybe I can answer a few questions in the meantime. 7th icon on the left, long position at category is a fixed range volume profile. Yes, I'm looking at this volume profile here. If you usually where you grab your long or short positions right here, drawing them on the chart at the bottom. I think if you have Pro, Plus, or Premium, you should be able to get the fixed range volume profile. And what I like to do is, for example, if I'm looking for fair value gaps and confirming fair value gaps of a impulse move to the downside, so for example from the swing high to the swing low, I'm grabbing it down here, and now I double check areas of low volume. So for example, if I would reframe this 5-minute fair value gap to this little fair value gap right here, from this week's low to this high, I'd see that the volume right during this time here, when this candle formed, was rather low compared to all the other ones. So if I, for example, then check next low point, would be right inside, oh, come on, go away, why do you have to be in the way? Right here, this would also be a confirmed area of low volume, not just by the fair value gap, but also by the volume profile. And sometimes you actually see fair value gaps and the volume right during that time period was high. So sometimes I like to confirm my fair value gaps using the volume profile. All right, let's see. No, I deleted the wrong indicator. Okay, here we go. Let's make this a bearish fair value gap. Too short from that half low volume. No, that's just a confirmation for the fair value gap. It always depends on the setup. Ideally, we would like to see a short based on, so right now on ES here, we did not have a confirmation for a bearish bias, so we lower reversal back up into our high. Since we already rated our daily sell side liquidity on a daily chart and our Monday slow as well, might be a interesting area to look for a potential reverse opportunity. That's all I'm doing here right now. We also had this bullish divergence, or the SMT divergence, based on the S&P and the E-mini Dow Jones, the NASDAQ both forming, no, the NASDAQ 100 and US 30 both forming lower lows right here. but not which has not been done by basically the S&P 500 futures contract. So I was looking for a fair value gap on a 1 minute time frame, what we got right here, to eventually take a long trade back above those highs, but does not look like it's going to work out. But we're going to be patient. We're not going to be freaking out. There was also a small divergence between S&P and Dow Jones. Those had both similarities that we formed higher highs right here. On this pullback, only on Nasdaq we formed lower highs, maybe giving us an early indication that this fair value gap might not hold, but we will see. We will see. So now on Nasdaq on a 5-minute chart, if this candle is closing below right here, we would have a confirmed bearish bias, at least on Nasdaq so far. DR is mostly violated on the Euro USD pair. How do you resolve that? Yeah, I'd say by simply not just focusing on the DR, also putting yourself in context of where you currently are in a weekly perspective. So where's your weekly high, where's your weekly low, where's your previous day high, previous day low, where's your liquidity areas? If you're, for example, like on Euro US dollar, if your bearish bias is being confirmed below your previous day's low, I mean, sometimes, yeah, it works that it's continuing further down, but this was a typical pump and dump setup. I mean, I wouldn't have entered short. No, it really depends on the setup. It's hard to say. Just putting yourself and your trades in context where sell side liquidity. And yeah, those trades where it does not work out, those are just going to be your losing trades. You regard them as business expenses, and even though you would have maybe lost 1% or 2% on those opportunities right here, I mean, on this trade, if you wouldn't have caught a 3 or 4 risk reward, I'm not sure what you're doing, but you should definitely practice letting your trades run a little bit longer, at least to the next interesting areas of liquidity. Okay, looks like this trade is not going to work out. I'm quickly going to close this position right here. Yeah, we almost hit our stop loss. Looks like we're closing below this fair value gap. We did not get a bullish reaction from. We also found actually a nice pin bar here, but I don't take fair value gaps short based on we don't have a confirmed bias as of right now. We also did not get into a fair value gap in our premium zone, basically, from where I'm only going to consider taking shorts. So yeah, it doesn't matter. Even though this would have been a nice scalp, probability was there that we could be reversing right around this area. But that's how probability works. You can't force it. That's the thing. You won't know out of a row of your next 100 trades. There's no way on this world that you will be able to tell which one of those 100 trades are going to be winning trades. You won't be able to tell that trade number 26 is a winning trade and that trade number 29 is a losing trade. There's no way of knowing that. That's not how probability and all this stuff works. I mean, if you roll a dice, it's literally the same thing, but you can't predict what's going to happen on your 10th roll or on your 20th roll. It's just not as simple as that. But you can say that over the period of your sample size, for example, of 100 trades, that you're going to win 60% or 50% of your trades. And all you have to do then is simply stick to your rules, execute it well, use proper risk management, and yeah, stick to your rules. It's basically as simple as that. And then for some traders, it's becoming too boring then, because there's no fun behind it anymore. You're just doing the same thing over and over and over again. But that's, in my opinion, at least the only way to really stay profitable and also consistently profitable. Sticking to a system, organized. Come on. No, we're still in our position, so it's not too bad. I just closed the trade on my... This could have been a quick sell side liquidity grab, who knows? All right, looks like that's what it was. Luckily we had our stop loss 3 ticks below our swing low right here, which has not been triggered as of right now. All right. Nasdaq officially closed below the DR range, so we have a confirmation for a bearish bias, at least on Nasdaq as of right now. We formed lower lows here on E-mini Dow Jones as well, and a lower low on the S&P. So there's no divergence between all of them. We're back in this 1 minute fair value gap right here. Let's check our Euro US dollar chart. We moved back into our 5 minute fair value gap in a discount zone. We will wait for our premium fair value gaps up here to be filled. GBP USD is moving closer and closer to our Monday's low, so our current weekly low, which is also going to be the next interesting area in terms of liquidity for it to hit. We formed our weekly high during Wednesday during the FOMC event, and we basically, from our high to our low, it only took 1 day, which we built up basically over Monday, Tuesday, Wednesday, and we took all this away basically within 24 hours, almost 24 hours. So let me zoom in here. We left behind a little fair value gap right here below the DR. We did not fill a fair value gap down here, so we will wait, just being patient. Let's see what's happening here if we get a reaction, because this was quite a, let's say, a powerful move, but we did not fill any of the fair value gaps that would lead us into a bearish direction. So right here, let's say we use this whole thing as a fair value gap, and this one up here. Ich kann nicht. Nein. Alright, so let's see if we might actually be getting a bearish continuation move from here, or if this was a quick sell side grab here, moving price a few ticks below our low right here for a continuation to the upside. So right now at in a discounted range, we are just going sideways on E-mini S&P. Same right here for Dow Jones, Nasdaq, and S&P. So right now, all lining up. There's no divergence anymore. They all formed lower lows, and lower lows. So that's all valid. Euro US dollar seems like it's continuing to pull up. And GBP USD still on its way down to our weekly low that formed on Monday. Right now we're just going to watch the 1 minute chart of the S&P 500 futures contract. What times do you try to not take any trades? What times? Usually during Asia. I'm also not able to trade the Asian kill zone at all, or the Asian range. So I'm avoiding this time first of all. And I don't know. I mean, I'd say, when do I not trade? I guess it's if it's not matching up with all my rules. If I'm not getting if a single one of my entry rules is not being matched, I'm basically not entering into the trade. And it's not depending on the time, it's depending on the setup. If I see a beautiful playbook setup on a pump and dump pattern like today on Euro US dollar, I'm taking a trade no matter what kill zone currently is. Ideally not during Asia because I'm sleeping then, but I'd say it's all based on the setup. What should be our profit target on the ES trade? This is just a small little scalp. I'm on my live account. I already have been taken out because of spread right here at this low. So I'm just letting this trade on paper trade. A profit target could be this swing high or this 5-minute fair value gap, this Monday's low, somewhere around this area. Take your first profits off, move your stop loss to break even, and yeah, maybe let 20-25% continue for a pullback into a premium area. All right, let's see how the other indices doing. So right now, Nasdaq is leading or diverging here, already formed a new lower low here. All the other indices are following, so I'd say we are going, if you are still in this long position, definitely close it. We did not get this reversal. We already had our confirmed bias here to go short on Nasdaq, but we might also be just amping up a little bit more for a reversal back into our premium area. All right, still inside this fair value gap on EU, and on GU not much has changed, still pretty much the same. That's fair. Just curious because some people only trade New York kill zone. Yeah, it's all depending on how you can basically schedule in trading in your everyday life. So for example, if you work during the London kill zone or Asian kill zone and you only have the availability to trade the New York kill zone, then only do that. Also for backtesting and everything, if you do backtesting, it's nice to know basically when you start trading and when you end your trading session, because there's also a limit. You can't sit in front of the screen for 6 or 7 hours thinking, or let's say assuming, that you're performing at your peak performance. I mean, no professional athlete is playing on the field for 6, 7, 8 hours per day. I mean, yeah, they're practicing, but they're not having to deliver peak performance in a, for example, Champions League final match or in a FIFA World Cup final match or something like that. They have a peak performance time of roughly, I'd say, 2 to 3 hours maximum. And yeah, that's about it. So try to reduce the amount of time you're trading. It's quite hard for me doing that live stream, but I really enjoy it. So okay, we got stopped out right here on our paper trade. Yeah, I'd say try to reduce your trading time to 1 or 2 hours per day during a kill zone, ideally, because that's when the market tends to move best. And see if you find your setup. If you find it, take it. If not, it's a day where you set up a Fibonacci extension down to 0.5. This would be a target right here around 3913.5. So if we do the same right here on a 5-minute time frame, geez, how hard is it to join with a muted mic? Yeah, good question. Homie, can you please turn your mic off? People are complaining in the live chat. Okay, it doesn't want to switch over to a 5-minute. US30 is following S&P and Nasdaq on this short trade. Let's see if this is going to continue. Super bearish day today. I think my internet connection is dropping right now. Okay. GBP USD. Let it load. I'm going to take a quick break after this, because I've been already streaming for 3 hours. All right. It's 11:20 now. It's about to hit lunchtime in New York. All right, so here we are. Formed a new lower low, went sideways around the DR IDR low, pulled back into it. But as of right now, we did not have a confirmation. Now we officially closed below the DF this close, or did not get this close below the DR slow. So bias is not yet confirmed on the Dow Jones. It's already confirmed short on Euro US dollar and Pound US dollar, or we could be waiting for a pullback into a premium fair value gap. Same on Euro US dollar. And E-mini S&P, let's see what this is about to do. All right. I'm going to take a quick break here. If I might see on your profile that you have a group, is it active daily? I love your work, so I'm interested if you leave here. No, I'm pretty much going to continue live streaming in my group. I'm not actually doing smart money concept and stuff like this because I think it's really sophisticated. There are enough people teaching it, and I also don't want to become another guru that's basically copying everything that ICT is teaching and stuff like that. So I'm just sharing stuff here for free on the live stream. I mean, ICT is sharing all his stuff also for free. So who would I be to basically make money based off all the knowledge that ICT shared for free? I don't know. There are quite a few YouTubers that actually do that. So I'm not a big fan of this. So I don't know, I try to build nice indicators that really help me using smart money concept strategies, but I also, of course, have my own very, I'd say, simplistic strategies that are based on an EMA, a stochastic RSI, and one of my indicators that I use daily during the London kill zone. And yeah, that's basically what I do. I'm not teaching smart money concepts. If someone's interested in learning smart money concepts, there are hundreds of hours you can spend watching ICT videos on YouTube for free, and yeah, I don't really want to jeopardize on that. Okay, I see a bunch of fair value gaps on a 5-minute on ES. What retrace would you look for in order for a premium trade? With a premium trade, I basically mean up higher and buy it back lower. Right now, we're still in a discount, so really, if you, for example, look for a fair value gap right here, of course it can work, but your risk to reward ratio is going to be different if you are entering. I've watched, for example, Mas7er's price action thing, where he also mentioned that the guy who's streaming, so practically me, said that there's a higher probability if price is coming up to a fair value gap here in the premium area. I did not mention there's a higher probability. I only mentioned that there's going to be a higher risk reward. That's basically what I wanted to say. So where's a good example? So for example, on GBP USD, we got our confirmation for a bearish bias. So if it's for example, let's say we have a bearish fair value gap right around here. Of course, you could enter short based on this fair value gap right here, taking it down to the 0.5 pip extension. But the question that I'm asking you is, where are you going to place your stop loss? If you know that you have 1, 2, 3 fair value gaps above you, or ahead, yeah, basically above you. So what you, at least in my opinion, what I like to do is I like to only consider trades out of fair value gaps that are above or around the 0.5 Fibonacci level. Right here, if we consider the whole D, and this is what I would call a premium fair value gap inside a premium PD array, right up here above this 50 perhaps above of me. And if I place another limit order somewhere around this fair value gap, for example, I know, okay, there's 1, 2 fair value gaps that are still sitting above me, but the probability that this high is going to be the high for the New York session is higher. If I place my entry down here for a target all the way down here of larger compared to if you place a trade somewhere around the optimum trade entry with your stop loss. Oh, come on, where did my chart go? With your stop loss somewhere around the DR's high. But that's just me. That's what I backtest, and that's what I usually trade. Yeah, exactly. Here we are. So if you place your entry here on a optimum trade entry basis and you stop loss as the DR high, that has a 88% probability to hold as the current high of the day, your risk to reward ratio would be better than if you, for example, basically just under 3 or 4 fair value gaps to the upside in a premium area. All right, let's have a look at ESH. What are we doing? So we closed below, we continued further to the downside, hit the current daily slow, but could also just continue retracing back up to the 50% level and to also take going to have a higher hit rate, and you're also going to be in more trades, blah blah blah. But if that's not really a concern to always be in a trade, then we have nothing to worry about. So all three charts are lining up now. We all have a bearish bias right here based off this 5-minute fair value gap, but we did not close below. So I mean, yeah, okay, we had a few hints, a few hint giveaways, so I don't know how we would say that, but we pulled back in this 5-minute fair value gap here on E-mini Dow Jones. We did not do it on NASDAQ, and we also did do it here on the E-mini S&P actually, but as well prior to, maybe because people are restreaming it. You can also just watch it on YouTube. I think on YouTube everything should be fine. Recording it as well, and I'm going to upload it. It's going to be still continuing, starting to get a pullback here on S&P. I'm going to send you the link right here. Hang on, where's the YouTube live stream link? Here. Copy link. Command B. The echo is due to restream, but you can simply manually mute every person in the stream and everything works fine. Yeah, that should actually help. Okay, my internet seems to be hanging up right now, but our bias is confirmed bearish, so we can all agree on that. So if you consider taking around the lower areas, like for example, what we could be looking at right now would be this 5-minute fair value gap for a potential, come on, Sam. Let's get rid of this quickly, let it load. So we would be considering a short. And from this fair value gap right here, if you are not, if you don't really like, I don't know, care about taking only fair value gaps in a premium array when you're taking a short position. So those are the two fair value gaps we could be looking at for a short continuation to the downside to fill in even more. Can it load now? No, I think my internet is killing it. Remind me what PDL is. Yeah, PDL is previous day's low. And if you check the weekly chart, unfortunately, I can show it to you right now because I think my internet is hanging itself right now. Yeah, here we are. We also, if we go onto a daily time frame, let's see if it's going to load. I doubt it, but we will find out. Right around this area right here. This is major sell side liquidity based on the weekly, those equal lows on the weekly and daily chart, under which we have this big 15-minute fair value gap from a move from the, I think it was on during November, beginning of November. Unfortunately, I can't show it to you right now. Yeah, here we go. This is that major sell side liquidity I was talking about. Those equal lows right here on a daily chart, under which we have this big fair value gap that we already filled in partially with those wicks here to the downside. And yeah, maybe we're filling in it completely, but I'd say for tomorrow we could be looking for maybe a little move to the upside again, but we will see what's going to happen. I also don't have a crystal ball that can tell the future. So Euro US dollar continuing being rejected. We just touched our Monday's low, basically, major sell side liquidity. And let's check our indices. 5-minute chart. Perfect. So what we're going to do now is we're going to grab our Fibonacci extension from here down till here. So we could be looking for potential shorts from this fair value gap. We're going to get rid of this here quickly. Somewhere around this area, those two fair value gaps can be used to enter short into the market for our take profit target here at a negative 0.5 deviation. Here on NASDAQ, we look like we already wicked into this fair value gap. So it's not a fair value gap above the 50% level, but still valid. This is our range where we could be looking for a reverse opportunity into 0.5 deviation. See, and see if we hit our 0.5 target. So on NASDAQ, that could have looked something similar to this. So I don't know, your stop loss could have been placed swing high with your target down here for a 2 risk to reward. Since we already wicked inside this fair value gap, our bias is confirmed bearish right here with those closest below the DR slow. Let's see. All right, ESH, what are we looking at right here? That's the daily chart. That's our Euro US dollar chart as well. Let's compare it to the DXY and see what that's doing. That is not loading. GBP USD, maybe bouncing off our Monday's low. We will find out. This is not a fair value gap. This was just a illustration for explanation. Does the DR high still count as a high probability high of session if the 0.5 standard deviation gets hit? That's a good question. You can write down that question or maybe send it into the questions channel here on Discord and ask that the Mas7er himself. Would be very interesting to know. I don't know that answer to that myself. I mean, I could guess. I'd say if it's being invalidated, because sometimes you see those things where, I don't know, we did not hit a 0.5 standard deviation here. At least I don't think so. Hang on. Oh yeah, we did hit a 0.5 standard deviation. Then we fully reversed based on this low. So it's a nice question. Maybe ask that to Mas7er and get an answer for that. Be nice to know. All right, ES1. Let's see. US30 is leading here with the move to the downside. NASDAQ is still holding up, and yeah, I'd say we just wait and see what's going to happen if we are going to hit our 0.5 standard deviation. All right, I'm going to take a quick break here. I'm going to be back in like 5 or 10 minutes, seeing what happened. I'm letting the stream run. All right, I'm back. Steps to a successful stream for our viewers. One, if you aren't talking, mute yourself. The end. That's very true, Troy. I'm just going through the chat here. I keep muting everyone that doesn't already have themselves muted. Anyway, if you want to get rid of this annoying thing, I'm streaming it live on YouTube as well. It's also going to be available if you missed parts of the stream. For example, at the beginning, I did a CPI, a FOMC analysis of, because I didn't stream yesterday, but I was still able to trade based off my iPad and my phone. And yeah, we just wicked inside this fair value gap here as well. Maybe we get the continuation lower now. Yeah, but what I was saying is that I did a little recap at the beginning of the stream, and all this is going to be recorded on YouTube. I'm quickly copying the link here for the YouTube video, and then it won't be as annoying anymore that people keep talking into the stream and all this stuff. That you have to continuously mute people that join the stream with their mic not muted, with a huge echo. So that's just annoying. I hate that myself, but we will see. So as of right now, I'd say that after thinking about this whole thing that happened today on the S&P, was that the ideal setup for that formed today was basically happening during the overnight range. Let it load for a second. And the ideal entry opportunity would have either been at 8 or 9:30 right here on this wick, where we basically wicked back inside our overnight range, or right here at 8:30 at this wick where we filled in this fair value gap, still inside right here, or you know, okay, our overnight range was right here in this red area where we wicked or basically started to reaccumulate 1, 2, 3, 4 times with this bearish engulfing candle, a retest and a break lower with a close below all the previous candle closes, leaving behind a fair value gap. Then we hit 8:30 where we got red photo news, where we basically filled in this fair value gap completely. So this could have been the best entry post our overnight range. So right at 8:30 could have been a beautiful entry short, or if you would have missed it and you still had a sell limit right inside this fair value gap at 9 a.m. New York local time, or at 9:30 a.m. New York local time, you would have been triggered short into the market with your sell side target of this daily sell side liquidity based off those two equal lows here on the daily chart. Right here with this huge fair value gap / volume imbalance down here. This would have been the overall target. Looking for fair value gaps now, being already inside this higher time frame daily fair value gap. I don't know. I'd say the probability is not as high as the probability we had right at 8:30 or 9:30 or during the opening range or overnight range. So yeah, I think that's just that's how I would sum up this day. We had this major drop at 1 a.m. New York local time right here, 1 a.m. And then we had the London kill zone open up right here at 2 a.m. with the German stock market. Then at 3 a.m. we got another consolidation sideways with a continuation further down, where we created the low of our overnight range. We pulled back into the lows of our overnight range, which is being represented by this red box right here, where you would have had plenty of opportunities to enter short into the market after our bias was already confirmed bearish inside those two fair value gaps right here for a short, also around the optimum trade entry based on ICT concepts, with a continuation lower, an 8:30 pullback back inside this fair value gap. Same for 9 a.m. New York local time and 9:30 stock market opening with this fair value gap. So your ideal entries for the day would have either been early London kill zone, 1 a.m. for example, or right around here, 6, 7, between 7 or let's say 6 and 8 p.m. when we retested the low of our DR IDR right here, or at 8:30, 9:30, somewhere around here. Looking for shorts right around here. Yeah, of course, your 0.5 standard deviation is still likely to be hit for today, but anything further than that it's not really interesting for me anymore, since we already are inside this daily fair value gap now, below the daily sell side liquidity. It's not really interesting for me anymore. The move for the day already happened, so yeah, that's just my take. We had a nice bounce here on pound US dollar of our Monday slow, not pulling into any fair value gaps here on a 5-minute time frame, not pulling into any of those interesting fair value gaps right up here. We will see what's happening. Same here. Our ideal entry opportunity would have been inside our overnight range, where our bias was confirmed bearish very early on, pulling back into basically the only fair value gap here on a 5-minute time frame, right here around the 50% level of our overnight range as well, where we basically closed above and instantly had a bearish engulfing candlestick, really confirming the significance of this fair value gap and basically reconfirming the overall bearish bias for the day. We did not really make a final push lower up until, I think, 7 a.m. New York local time. But again, we pulled back, continued lower, forming some sort of a double bottom. And for a last time, past 8:30 basically, when the US news hit the market, we pulled back once more inside this fair value gap right to the 50% level. So right here would have been your ideal entry, right around the 50% level, with your stop loss maybe for, I'd say, 20 pips stop loss on Forex pairs is always great, especially if you use sell limit orders. And your overall target would have been Monday's low, because if you would have looked at it on a daily chart, it would have been very, I don't know, would have been standing out as your major sell side liquidity target, which would have been hit for a beautiful 7 risk to reward trade. Very easy. As you see, during New York, we almost got no pullbacks into any of those great fair value gaps right here on GBP USD. All right, let's go back to our overview. We're about to hit our 0.5 standard deviation. Let's check it out on right here. If we already hit our 0.5, does not look like it. 0.5 level based on our IDR. Also not hit as of right now, with this huge wick that we formed at 8:30. If we don't calculate in this wick for our DR range with our Fibonacci tool, we're still quite a bit away from our profit target. Same here on NASDAQ, where we have our control point right here. If we only consider the closest of our opening range, we're about to hit our target, and then our risk to reward ratio would have only worked out to a 1.55 risk to reward ratio. All right, so let's have a look at here. So that's the only reason why I consider this New York Hill zone, at least for me personally, to be over. I'm not looking forward to take any trades anymore, since the best trading setups happen during the overnight range or at 8:30 a.m. New York local time or 9:30 a.m. New York local time at the stock market opening. For you, for how long have I been trading? I've been trading for total, I think 5 years now. It's 2023, almost 5 years, profitably for the past 2 years, using simple strategies. And I'd say the advice I would love to have heard in my first or second year is, if you never traded, I'd say 100 trades with the same strategy, with dedication and basically just sticking to this one simple strategy, whatever it might be. It can be this new super great ICT concept, DR, IDR strategy that the Mas7er basically released. It could also be a EMA crossover strategy, because probability works out in the long run. You will never be able to basically tell if this trade is going to be a winning trade or a losing trade. It's just what it is. It's always going to stay this way. But over a row or over a series of 100 trades, you can say with certainty that you, for example, are going to win 50% of those trades. And even if you win 50% of those trades, and so you basically, meaning with that is that you're losing more than half of your trades. But if you, for example, taking profit at a 2 risk to reward ratio, you're still ending up with so much profit. Even though you lost 50% of your trades, even if you lose more than 50% of your trades, you're still profitable. And that's something I wish I would have heard a little bit earlier, or maybe I'd say, maybe I heard it, but I ignored it. So this would be my best advice, that will bring you to consistency and profitability. Trying for maybe, for example, for the next year, use the DR, IDR strategy, or whatever strategy you always thought, oh, I should have been using this strategy. Try to take 100 trades only with this one strategy, nothing else. And then you can say if the strategy is going to work or not going to work for you. But after 3 or 4, maybe 10, 20 trades, forget about making any decisions if this strategy is worth taking or worth practicing or worth continuing with or not. Bitcoin chart. Yeah, I can have a look at the Bitcoin chart. Let's just look at our indices overview. Still trending lower. We found a lower low on ES and Dow Jones. We still haven't broken this low here at 11.15 on our Nasdaq chart. So we see a very light divergence here. Bounced off our Monday slow again, just pointing out that weekly lows, and so the current weekly low, you're not going to know where the current weekly low is going to be until that week is finally closed. But you can just keep track of your current weekly's high and low for the whole, basically for the developing week and for your past week, for interesting areas to look at. Because yeah, I'm just going to continue before I'm talking too much again. Let's open up the Bitcoin chart. All right, so let's open up Bitcoin, BTC, USDT, Binance. Don't like Binance, but let's use Binance. 5-minute chart. Let's first of all look at a daily chart. On a daily chart, we see a massive fair value gap here. Right here, and we also have I consider this as sell side liquidity right here. Let's use those two lows. Let's make even lows out of them. That's still the sell side liquidity. They're relative equal lows. Relative equal lows, sell side liquidity, colored in red. Red line. I would consider, I mean, since we've been rejected off from this fair value gap right here, and this fair value gap right here, I'm not going to go back any further than this, but those are the major fair value gaps right now. So we could consider buy side liquidity, at least for the short term, right above this high. Color this in green. We're going to write buy side liquidity. All right, so that's our 1 hour daily time frame. We are currently inside a bullish fair value gap if we look at this as it is right here. So we're also going to look at this bullish fair value gap. Just mark out everything you see on the daily. We had a bullish fair value gap prior to that we filled in partially, moving our way back up into this bearish fair value gap. And how you can confirm those fair value gaps is simply by using, for example, the volume profile. And by using the volume profile, hang on, we only want to see this small downtrend here, those 3 candles. You see that there almost haven't been any transaction within this fair value gap, also down here. So price is very likely to just pull back a little, maybe inside this fair value gap, and continue down further. But it really depends on what's happening with all the indices and everything else. If, for example, so with crypto, it's interesting because right now crypto exchanges are, let's say, they're they're playing a very big role in the price of Bitcoin because of what happened, for example, with FTX, and that they, for example, had no proper reserves and that they basically were just using illiquid Bitcoins. So actually there were more Bitcoins circulating that there actually should be circulating. So tons of bullshit happening on crypto exchanges, especially Binance. I don't like those guys, so make sure, I don't know, buy a ledger or something, or a cold wallet to store your crypto safely. Also during the last bear market, I don't know how many exchanges went broke, but quite a few. So I would avoid that risk. So on a 4-hour chart, we also still have those two fair value gaps sitting right here that we're currently right inside of. Do we have another fair value gap in here? Nope. So we check our 1-hour chart. On our 1-hour chart, do we have any fair value gaps closer than the one we already checked? On a 1-hour chart, we could, I don't know, we could reframe it down to this fair value gap right here. Those two fair value gaps have already been filled in, so we don't really need to look at those ones. So this is going to be our fair value gap. We could be looking at this big candle basically as an order block to the downside. All right, nothing else really to look at on a 1-hour chart. We could again refine our order blocks, our daily order blocks down till here. We just touched this one as well. Right here, they do work surprisingly well on Bitcoin. All right, do we have any other note? This big candle right here from Wednesday has been filled in completely by to the left side and right side with those big wicks. This fair value gap has also already been filled. This was a bearish fair value gap right here that we've been rejected from ever since. This happened today at 8 p.m. New York local time. So let's check a lower time frame. All right, what can we see? Basically, we can redraw this little fair value gap right up here, which we reacted from. There was no major, maybe a tiny weeny little fair value gap in here, currently to the downside. So this is going to be a red fair value gap. What exactly is it do you want me to look at, Bitcoin? See Bitcoin chart and give some information. So currently I'd say accumulate. Basically on a weekly or monthly basis is the best approach you could do, because the bull market is likely to come back. So even if it's not coming back, the risk to reward ratio, if it's coming back, is still going to outweigh basically everything else. So just start to accumulate. We are currently inside this 15-minute fair value gap now, which eventually will be closed in, and we are maybe reversing back up to close some of those remaining fair value gaps we just recently created, which would be this one right up here. But yeah, other than that, on Bitcoin, we can also use the DR IDR indicator. I actually never used it on Bitcoin, because the only thing I'm doing with crypto, I came from the crypto space and entered into the Forex and index trading world basically from crypto. But now I basically just switched to a weekly investing into the crypto market space and starting to build up a nice Bitcoin position, Ethereum position, Chainlink, for example, Polkadot, basically the projects that where developers are still building during the bear market. That's always a great sign, in my opinion. So if we look at the London range, we did not get a close below, but we got a close above on a 5-minute chart. So our bias would have been bullish, which was basically completely ignored. The reason why I would have still doubted this bullish bias was this bearish fair value gap right above our DR, which has been filled. And then we got a nice little reversal here from the upside. There was no fair value gap that we could have entered on based on this pullback. So right now we are just looking at those two smaller fair value gaps here on a Bitcoin chart. I'm not sure how it works trading Bitcoin. Of course, some days it's going to work extremely well. on some days it's not going to work out at all. Just needs consistency. So for our New York range right here, we close below, so we could be looking for fair value gaps to the downside. And to the downside, we could have, for example, taken this fair value gap short into this higher time frame fair value gap here for an ideal risk to reward ratio. Yes, it does, but the crypto market has less regulations than the Forex market or indice market, so because of that it may move more wide. The algo has to respect these regulations. That's what I understood from masters, at least 100%. Crypto market, that's why, for example, on some of those smaller exchanges you always see those big scam wicks. Yeah, because it's way easier to manipulate than a big indice or Forex currency market. All right, so we're about to hit our take profit target right here. We did not leave behind any new fair value gaps on any of those charts. So like I mentioned, we're now inside this big daily fair value gap. Can consider the day to be over unless you still wait for this retracement and continuation in the PM session or in the afternoon session of the New York trading kill zone or after market hours, something like that. Gonna be interesting to see what's happening tomorrow on Friday, the end of the week. If we're getting a slight pullback maybe, or if we are continuing further lower, leaving a fair value gap behind. But overall, I'd say we rated buy side liquidity completely. Now we took out the daily sell side liquidity. Right now we have liquidity sitting below all those swing lows and major liquidity below the low of October the 13th. It's interesting. Here, Tuesday, September the 13th, high FOMC day, reversal, and we have Thursday, 13th of October, forming our high, and then we have December the 13th, forming our new high. So I think I'm onto something here. What do you think? 13th every month is going to be an important day. That can't be a coincidence. I have to check on that. Hang on. So the 13th of December, we had this massive wick to the upside on FOMC. All right, let me make this a dotted line so we actually see the wick. On 13th the October, we had our low point. On 13th of November, okay, there was no 13th of November, so valid point. Why was it? Because it was a weekend day. On 13th of September, Tuesday, we had another major impact news day where we reacted from a previous fair value gap. Let's continue this quickly. 13th of August, was there a 13th of August? No, there was also no 13th of August, but was around a peak as well. Yeah, yeah, basically 13s are usually CPY, usually. Unless the 13 lands on a weekend, then in this case not, like for example perhaps here, where we had a CPI news event, a FOMC or a CPI news event on 10th of November, forming this big fair value gap right here. The 13th. Okay, so now we are starting to pull back. We formed equal lows basically on NASDAQ right here. So this could be interesting to look at. What's the time right now? It's exactly 12 a.m. New York local time. So a new hourly candle is opening up, bringing in new hourly volume. So this is likely to, could be a reversal point, could be a slight pullback to trap hourly traders that went short into the market. But right now we formed a light divergence with lower lows on both S&P and Dow Jones and with equal lows on NASDAQ. So we will see how the market reacts from those levels. We did not hit our 0.5 standard deviation on any of those indices. But like mentioned, with all the indices, we are below our daily sell side liquidity. That was a nice target for today. If you maybe got in those trades early, for example during the overnight range. Let's have a look at our Euro US dollar chart. For right now, we just continue to go sideways. We'll see what's happening out from there. But today, the market, I guess, is pretty exhausted after this major pump, where you could have entered on many of those fair value gaps long into the market, and this dump based on the DXY divergence we saw earlier above our FOMC high. And what I have to say about SMT divergence is I backtested lots of SMT divergences on 1 or 5 minute time frames, and basically taking every SMT divergence literally for manipulation and stuff like that. But what I at least discovered for me is that I am only going to use major points for SMT divergences, like for example a previous day's high, previous day's low. If for example, like right here, our previous day high from our FOMC news event is being violated on Euro US dollar with a stop hunt almost 50 pips above our previous day's high, and on the DXY we do not see the same thing happening, then we're talking about divergence, and then we are maybe likely to see something similar to this pump and dump setup. Let's have a look at our GBP USD chart. We're just consolidating now on our Monday's low. If we scroll back, right here we have our Monday's low. We have a small low lower than that on Friday at 8:30. So we could also be dragging this out using a horizontal ray right here. So this could be an interesting area, since those were both some wicks all the way down till here. Perhaps stop hunts trapping traders short, or triggering sell stops into the market, reversing it completely on those sell stops. So it's going to be interesting to see how the market is going to react from here. Maybe we see a pullback in some of those premium PD arrays to take it short from. You could also expect a reversal, but the high probability setup happened today during the overnight range, where we basically had a close below, pulled back into our 5 minute fair value gap right around the 50% level of our overnight range, 1 time, 3 times, 4 times, and every time when we wicked into it with a bullish candle, we had a bearish engulfing candle followed. So bearish engulfing candle once, bearish engulfing candle 2, pump up, pin bar right here, bearish engulfing candle, continuation to the downside. Yeah, very simple setup in my opinion, at least. Right here, entry at the 50% level, or if you want to wait for the confirmation, enter based on this one of those engulfing candles. Stop loss could be right above the swing high, or this swing high right here. I wouldn't go all the way up to the DR's high unless you want to really play it safe. And your take profit target could have been the Monday low basically, and everything that happened during the New York kill zone or the New York range was just an extension for what was set up during the overnight range, in my opinion. Same for indices today, but on indices you at least had the chance today, if we break it down to a 5 minute time frame, to re-enter post 8:30, or no, I think you had the same chance on GBP USD, because this entry was right at 9:30. 9:30 was right here. So prior to 9:30 would have had a beautiful entry opportunity here on pound US dollar, and right at 9:30 here on S&P 500, where we wicked back into this fair value gap prior to 8:30 news, where we also wicked into this fair value gap, and also on our hourly candle open, we got into this fair value gap, bearish engulfing candle, rejection, continuation lower, pullback towards 9:30, stop hunt, continuation lower, hitting our daily sell side liquidity. And everything that happened post daily sell side liquidity was just a, I don't know, no ideal trading environment, you could say. That's also why this little trade here did not work out. The probability was there because we already took out sell side and everything, but yeah, nothing really major. All right, so yeah, that would be the analysis for Bitcoin. 13s are usually CPI, yeah, always between 10th and 13th. Yeah, those are usually the points that really, yeah, shape the outlines of the trend or the market that we usually see. All right. Are there any other questions you'd like me to answer or something? As long as I'm still here. So we looked at Bitcoin. Bitcoin, my best advice would be to look at the weekly chart. right now we still have a few weekly fair value gaps sitting right around the 12 grand level, which will also be one of my forecasts for a bear market bottom. We also have a fair value gap right below the 10 grand level, because in my opinion we did not have the I don't know, basically the point of time where most of those buyers who bought Bitcoin somewhere up here really give up and say, no, okay, Bitcoin's dead, it's going to go to zero. Like every cycle, everything has to repeat before it can start fresh. So we have another fair value gap right here. So there's no real necessity to basically just think this is going to be the bottom and trusting some YouTubers that call bottoms in every month. Basically, this is going to be the bottom, this is going to be the bottom, and or this is going to be the bottom. Just slowly DCA into the market. What you could do, for example, you could grab our bear market bottom right here, which happened in January 2018. This is our bear market bottom, and we drag a Fibonacci extension or Fibonacci retracement tool all the way down to here. So we see we're now below 70%. We can add a few more levels, like for example a 0.85, maybe 85% retracement, and you see how those retracements match up perfectly with our fair value gaps. So what I suggest to do is, I don't know, on its way down, if you say for example you have a no matter how big your amount of money is, you would like to invest into Bitcoin or into the crypto market, I'd say split it up in thirds or quarters or something, or even fifths or sixths, whatever you like, and slowly scale into the market based on Fibonacci pullbacks, because the probability of you nailing the bottom if you basically enter with 100% of your capital is really low, and you're putting your money at too much risk basically, because even if this is going to be the low, it's hard to tell in advance, you know? That's the problem usually. So if you scale in, for example, you would have bought some here, bought back here because it's the next month. You buy, for example, in a monthly cycle. You bought during November. Now you're going to buy maybe during January, February, right around the 8.5 FIB extension. So when the bull market retraced by 85%, then you 5% here. And here you are. You're not basically, you don't face that risk, that one-sided risk anymore, that for example you putting in 10 grand here and then it's going to continue dropping for another, I don't know, 30% or 40% for a 90% pullback during the bear market, which would mean you only have 6 grand left of your initial 10 grand investment. And if it's more money, it's going to be more emotional and blah blah blah. So slowly DCA into the crypto market. There's no rush right now. Whatever the news are, of course you can scalp it, but you can also check Heikin Ashi candles for a general trend right now on a weekly chart. There's no need to believe that this is going to be the bear market bottom, at least in my opinion. We will see if I'm right or wrong. Then everyone's gonna give me the shits. Candlestick buy BTC worth looking into. I have already read it, but is it something you use often in your analysis? Candlestick analysis, usually I only, dojis are really sometimes a nice giveaway. Also same for pin bars. So if you see a pin bar around a daily high, or where you're actually looking for a reversal, for example like we had during the FOMC news release. Let me just quickly look at our charts. Everything's still lining up. If I'm doing the analysis for yesterday's FOMC news event quickly, hang on, 15-minute time frame, what we got right up here. Now I have to go to the ES1 chart because I did all the analysis there. Let it load. Yeah, so that's my Bitcoin advice, to sum orders up. All right, so FOMC was right here. That's we're going to use replay feature. We got rejected right here. Let's see if we had a 1 minute fair value gap somewhere in this area. Yeah, we actually formed a 1 minute fair value gap right around this area. that we wicked in 1, 2, 3 times already, which could have been a nice potential entry short to hit our 0.5 standard deviation. So back to your question about candlestick analysis. So what I like to do is let's replay it back to this point in time here. That's really what I want to see. So I use bearish engulfing candles, but not every bearish engulfing or bullish engulfing candle, only if it's reacting from a point of interest, for example. If we are at a current daily high, like for example yesterday, if I go to a 1 minute time frame, I'm going to show my trades now that I took yesterday during the FOMC news event. And this candlestick analysis really gave it away for me. That's why I actually took a trade 2 minutes prior to the FOMC news relayed into the short direction because of a pin bar that, yeah, in my opinion, gave it away what's going to happen. All right. It's all part of this, I don't know, this huge recipe for my analysis. So what we got basically is we formed our where is it? So our 10-9:30 opening. So we had a high of the day in just prior to the lunchtime hour right here from 12 a.m. until 1 p.m. New York local time. So that's what I marked out right here to see what's happening above this high. And this is our current high of the day. We worked our way back into our DR range, but we did not fill any of the interesting fair value gaps other than this one. We also took out those equal low sell side liquidity. As soon as we took this one out, we continued our way back up quite aggressively. And our news candle was happening right here at 2 p.m. New York local time. That giveaway for me why I entered short into this market. I don't know why all my drawings disappeared, but for some reason they're gone. Was this consolidation above the current day's high with a pullback back into it, and then followed by a stop hunt. So we had this swing high right here that has been wicked above, and this nice bearish engulfing pin bar. It's not really a pin bar here on a 1 minute time frame, but I'm going to show you even more giveaways before at 2 p.m. New York local time. So we had this wick to the upside that I consider a stop hunt. And if we go to a 5 minute time frame, hang on, where do we have it? Euro US dollar continued to drop below our current daily low of our fair value gap right here. So this would have been a nice continuation entry. Of course, not a fair value gap in our premium PD array, but still nice fair value gap entry, which would have been very valid, especially as we saw all those wicks going to the upside, basically telling us that sellers stepped into the market, pushing prices back lower, and had the upper hand against all those buyers. Bearish engulfing candlestick could have been a giveaway, or this fair value gap after we closed below all those previous closes. We pulled back into the fair value gap into our DR low. So if we do some quick analysis before I jump back to our FOMC recap, right here, this fair value gap could have been a potential entry. Right here at our DR's low, we place our stop loss at our swing high, our take profit target right here, or we choose, for example, to use standard deviations of our range right here, where our 0.1 extension could have been down here for a higher risk reward ratio, but our sell side liquidity trade would have been right here for a 1.8 risk to reward ratio. Very nice setup. Worked out beautifully. Quickly check pound US dollar. Pound US dollar also consolidated above our Monday's low and continue breaking down lower. We hit the 0.5 standard deviation now of our New York range. Let's see if we continue actually lower. Let's check our US indices quickly in a overview on a 5 minute chart. Let's see what we get there. So we pulled back into this fair value gap. None of the US indices have hit the negative 0.5 standard deviation short as of right now. Euro US dollar and pound US dollar have been moving very nicely today with those setups right here with the London overnight range. But let's get back to our FOMC analysis. If the 15-second chart is actually loading. Yep, here we are. This is what we've been looking for. So now this was a dead giveaway, a confirmation to not close my position prior to 2 p.m. New York local time. Usually I don't trade high impact news days. It really depends on the setup. That's crucial for me. So what we had right up here, maybe some people will spot it right away. Okay, let me make this line actually horizontal. Yeah. All right, that's done. Let's say this is sell side liquidity after a nice little consolidation. Of course, it's a 50-minute time frame. This is not actually playing such a big role. So what we are going to do is we're going to write a label here as our current high of the day. And if you think about it, what you want to do is you want to sell high and buy it back at a lower price, or you want to buy it low and sell it back at an even higher price. This is how trading basically works. So currently we are at the high of the day, and I thought about it and talked to my friend about it, whom I hanged out yesterday basically, and we were also discussing we're not going to buy at a already high price to sell it back at a even higher price. So we came up with our current high of the day, basically pump and dump setup. And on a 5 1-minute chart, you would have seen this beautiful pin bar stop hunt above our current daily high, just minutes or seconds before we hit the 2 p.m. New York local time FOMC news candle. But 15 seconds prior to that news candle, after which we got basically this nice doji here with this huge wick to the upside. And this massive bearish engulfing candle here to the downside, also with a nice wick to the upside. What did it leave behind? A volume imbalance right here, a volume inefficiency. And look where we wicked right inside of 15 seconds prior to the FOMC news event. Well, I mean, if that's not spot on in precision of the algorithm, I don't know what is anymore. As soon as I saw that forming on a 15-second time frame, I was shocked. I looked at it and I'm like, whoa, okay, that's precision. Right in here, there was no, but 15 seconds prior to this candle, for some reason we wicked into this area again, continuing lower. Then we had a huge inefficiency gap right here as well. We closed here and we opened back up right around here for the continuation move to the downside. And then another interesting point for a continuation trade, in case this is just too risky for you and you don't like gambling, even though with all those conferences here, starting from a 5 to 15-second time frame, which all line up perfectly for a bearish bias with pin bars, dojis, and volume inefficiency short. You could have also, if we're looking at a 1-minute time frame quickly, a continuation short trade right here. That's why I'm also going to point out our previous day low and previous day high again. If I zoom out on here, let's quickly do that on a 15-minute time frame. Let's check back on our indices. Nasdaq went back into our fair value gap on our 1-minute time frame, getting rejected right now. Maybe we get a bearish engulfing candlestick. We see that US 30 did not form a similar pullback, so the US 30 currently is just going sideways, literally, while S&P and Nasdaq are still curling up. Let's go back right here and do our analysis. So what we had is Tuesday, this was Wednesday, so we are currently looking for our Tuesday's low. Our Tuesday's low formed right, I guess this would be considered our Tuesday's low right here. And for a continuation trade short, what I did, of course, I'm marking out my previous day's low and previous day's high for interesting areas to take liquidity from or to take profits, was this. So initially we did not hit our previous day's low, we got close to it, pulled back, and what we got right here on a 15-second time frame, you see it a little bit better. So I'm going to replay it all the way back to here. All right, so if we now go on a 15-second time frame, yeah, you can trade on a 15-second time frame, but only if you, for example, trade a CME mini futures contract where you actually pay for the real-time data, not from a 8-cap 15-second chart. This is not going to work out. But here on a 15-second time frame, we saw that we had some sort of sideways movement right here. So we marked this up as our order block right here, which basically pulled back after forming a low, pulled back, forming a new lower high, and forming a new lower low. So basically we had a nice bearish market structure right here. Let me use those yellow circles to indicate the market structure. So we found a new lower low. And then we pulled back into a few fair value gaps that were sitting right as soon as we went out of this consolidation area. Our highest fair value gap was sitting right here. And if we measure out from our latest impulse, our most recent impulse was to move from our most recent swing high to our most recent swing low. So we use our Fibonacci retracement tool, drag it down to here, and what do we see? We got a 0.7 pullback, our optimum trade entry pullback right here. We never touched it again. This would have been the perfect entry. If you don't like entering with limits, you would have entered with a bearish engulfing candlestick, for example, as a confirmation, stop loss at your 0.8 Fibonacci level. We continued going sideways, so if you don't like being stuck in a trade for too long, remember it's a 15-second chart until it would have hit your take profit. That would have been 20 minutes, so it's not too bad. So for a continuation trade to the downside, for example, looking for it to hit your previous day's low sell side liquidity, that would have already been a 2.6 risk to reward trade. If you did not get this trade or did not see this entry on a 15-second time frame after retesting this fair value gap for a last time and again being engulfed with a bearish engulfing candle, we left behind a bearish fair value gap right here, in which we basically pumped in, got rejected again, consolidated sideways with huge wicks, dojis, indecision basically, and one last time we entered into this new fair value gap right here, confirmation by this bearish engulfing candlestick. Could have entered short right here with your stop loss maybe above the swing high, 23 ticks, taking profit at your previous day's low for a 2.39 risk to reward, or letting it run for a few more seconds and closing it as soon as you see some resistance or some sort of pullback starts to form for a higher risk to reward ratio. So those were my two trades basically that were formed during FOMC yesterday. We actually also see some nice chart patterns like a head and shoulder pattern that basically led us into the price action we got today, if it's eventually going to load. We found a fair value gap of which we reacted bullish from, I'm pretty sure, if it's going to load this bar replay feature. But yeah, let's say our most important sell side liquidity has been taken out, which in this case would be our previous day's low. So from the low to this candle to the high of this candle, that already has been filled in. But let's see if enough buyers step into the market to actually engulf this already super bearish candle right here. That would be momentum shifting in my opinion. So we are forming higher highs, higher lows. Sorry about that. Higher lows right here now on S&P. Same for Nasdaq. And on the Dow Jones, we are starting to form some sort of a sideways movement, double bottom style, below our sell side liquidity inside this daily fair value gap. So I don't know. My buys for today, I mean, it was bearish for the whole day. We could be looking at some sort of a retracement in the afternoon New York session, but we will find out. All right, let's check Euro US dollar and pound US dollar for one last time. We had our current low of the day. So basically today was just a massive liquidity hunt below our yesterday's FOMC low of the day, high of the day, took it out. So our Tuesday's low, this is Wednesday low has already been taken out earlier this day. Nice stop hunt with some nice entry opportunities. Let's have a look at pound US dollar, pretty much the same thing. Our US indices during the New York Hill Zone have not been performing too well, not offering us too many nice entry opportunities that have been confirmed with the DR/IDR indicator or with the DR/IDR strategy or system, whatever you want to call it. Until it was confirmed, it was already 1105 on the S&P 500, and it was 1055 on Nasdaq, and until it was confirmed it was 1110 right here on the E-mini Dow Jones. And after this we did not fill any fair value gaps right below this level. Of course, you could have speculated and, for example, take this fair value gap short right here after we had a beautiful, also where candlestick analysis is really helpful. We pumped into this fair value gap, had a doji with a indirect bearish engulfing candlestick, so a bearish engulfing candlestick that engulfs the previous bearish engulfing candlestick, basically, if you consider this doji, which could have been an indication that this might actually hold, but you would have entered right here on this close of the candle and not inside the fair value gap anymore. Looking forward to hit at least your 0.5 standard deviation, which could have offered you a risk to reward ratio of, here's our high, there's our low, a nice 3-to-1 risk to reward ratio. Very profitable. Nothing to complain about. Even if you wouldn't have taken a fair value gap entry and you would have only based it in confluence with the fair value gap and your candlestick analysis. All right, so, and pretty much the same happened on the S&P 500, where we pumped into this fair value gap, had a doji that's basically a sign of indecision, or I don't know, just orders being filled, and a indirect bearish engulfing candlestick with that also left behind a fair value gap that has never been returned to as of right now, which also would have been perhaps a at least 2 or 2.5 risk to reward trade if our stop loss would have been a 1-bar stop for a 2.75 risk to reward ratio. I'd say those were the only great entry opportunities regarding our DR IDR range that has been formed, but at this point of time our range was not confirmed yet. It neither was on Dow Jones, neither on S&P 500, also not on Nasdaq, where we did not even get into this fair value gap. The only thing that we really formed is a small SMT divergence between the indices right here. We made higher highs on the S&P 500 and on the Dow Jones. Only on the Nasdaq we had this divergence where we formed lower highs, which was maybe a giveaway or a sign of weakness for this move to the downside. But prior to this bearish divergence, basically here on Nasdaq compared to S&P and Dow Jones, we had also had a bullish divergence right here, because we formed higher lows on S&P and Dow Jones right here. Now we formed a higher low on the S&P, but both on Nasdaq and the Dow Jones we formed lower lows towards the bottom of our opening range here from 9:30 until 10:30 a.m. New York local time. So not sure what this is going to tell us, but like mentioned before, the best trade setups happened today during the overnight range and around 9:30, 9 a.m. and 8:30, where with the news candle basically we had a small SMT divergence right around that time as well. We formed a higher high based from 9 a.m. until 9:30 on S&P 500 and Nasdaq, and we formed a lower high on the Dow Jones, looking at those two candles right here, or those two wicks basically. So this was your best entry opportunity to enter short into the market to actually make some profits on this whole move to the downside. Or of course during the overnight range, where we pulled back into our fair value gaps right in here on all three charts. We had the same setup where we basically, for retail traders, formed a bearish flag pattern, left behind a fair value gap. We wicked inside this fair value gap 3 times before continuing this trend to the downside. Same here. The bear flag just looked the best basically on S&P 500. Pattern traders. Funny. All right, Euro US dollar. This one is pulling back into a bearish fair value gap actually right now, but the major liquidity has been taken out. It's really up to your rules and your playbook and what trades you actually consider taking and basically meaning that you have to have your playbook, or but what I mean by playbook is a strategy rule set, which basically helps you determining if this trade is a valid trade that applies with all my rules and blah 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 blah. Just because this is going to help you filter out good trades from bad trades, basically, or filter out trades that you should take and trades that you should not take. And this would be, at least for me, after we took out major liquidity and we had this major pump and dump, this is not something I'm looking forward to trade. Would you be comfortable describing the retirement setup, the retracement setup on DR, IDR? What do you mean by the retirement setup on DR, IDR? Do you want to retire based on a strategy? I'm streaming tomorrow, yes. Tomorrow is going to be interesting because, you know, where we are here on the US indices, below this major sell side liquidity, yeah, it's going to be interesting to find out. Wavelength, oh mama. What time? PSD pre-market? No, I'm not going to be streaming pre-market. I'm going to be trading personally. The London kill zone perhaps. And then I'm going to be streaming live during New York, I think 8 a.m. New York local time, something around that, 30 minutes prior to, but it depends. Today I streamed a total of 4.5 hours, so we're getting really close to 5 hours because we started already at 8 a.m. New York local time. If we're only considering the 9:30 until 10:30 opening range, the DR IDR range, I think I'm going to start the live stream a little bit later tomorrow, because otherwise I'm going to be sitting here for 5 hours, which is super exhausting, to be honest. So yeah, unless I'm deciding to live stream the overnight range, but I think I stick to the New York kill zone because it's a little bit more volatile, at least not every time, but most of the times, I'd say. Alright, forming a sort of double bottom pattern right here. Consolidation sideways on all three indices. We might get a pullback now into one of those fair value gaps, but I'm not interested today anymore. The best, highest probability plays already happened today on all charts, on S&P, on NASDAQ, on Dow Jones, starting with the overnight range with all those 8:30 and 9:30 entries into this fair value gap short. Same for pound US dollar and euro US dollar with this beautiful pump and dump setup. So yeah, I guess that's it for me today for this live stream. I hope you enjoyed watching it and learned something. And yeah, I will be back tomorrow, I think a little bit later than today, so it's not going to be so long. But yeah, guys, take care, trade safe, and stick to your strategy. That's the best thing you can do for your trading. Oh yeah, and the live stream is going to be available on YouTube. The link is, the YouTube channel is called Accumulation Zone. So if you like to rewatch the live stream, it's available on YouTube. So I don't have to upload a video file that's roughly 5 hours long. Take care, guys.